All right. Hi guys, this is Randy at RT Row, and I'm here, of course, with
Danai at 8 Danai.
And this is earning season, like you guys know and love. And this week, again, we have two guests actually, two wonderful guests. And as always make people introduce themselves. I don't ever get their names or their titles wrong. But I start with the two first names. I have Kerry and Kwame, both from JMB. And
Kerry, they know and love.
Yeah, Kerry, they do know and love. Yeah, people ask me a lot about you, Kerry, and Kwame. I suspect people have a whole heap of questions. So yeah, man, they really do. So we also have BAM Productions, as always, guiding us. big up the Jamaica Podcast Network and BAM Production Studios. And I will allow my guests again to introduce themselves right off. So Kerry, I'll make you go first, and we hear from Kwame.
Okay, hey guys, Kerry Ann Stimson, and I'm the Group Chief Marketing Officer, aka Group CMO at JMB.
And I'm Kwame Brooks, General Manager for Trading and Treasury in JMB.
That's it. Just trade and treasury.
The big box, right?
The big boss, yeah, the money.
The big box, yeah, man.
I want a few words.
Not much people may understand. So, trading manages what we call a proprietary book for the company. We invest all funds on behalf of the group.
Who are, like you say, is where the money happens. Essentially, all investments for JMB?
Yeah. So, whatever tradable assets that the company participates in would fall in my department. So stocks, bonds, currencies, real estate vehicles, such as REITs, mutual funds. So any tradable instrument.
Really falls under you?
Yes.
Okay.
And then treasury basically manages the pool of funds to ensure that the adequate amount of funds are deployed and that when you come for your money, on any given day, then you can get it.
There we go.
So basically, the two departments combine to ensure that, one, whenever you need your money, you can get it. And two, your funds that you place with us are invested in the best vehicle to ensure the best returns for you.
That I like. Money.
Sounds good.
Yeah, it sounds very, very good. So it sounds like heavy pay. You have to keep them happy. But I Kwame, you are well experienced. I say from now, you used to be or still are head of...
No, used to be. I'm a past president of the Cambia Association.
Okay. And so anybody listening know exactly why we have him on because this is somebody who understands Forex.
Yes.
Yeah, so
I'm also a vice president of the Security Dealers Association.
Okay. The man really know it. All right. So then,
Top boss. Was right
real
guy.
boss. All right. So so like for me, I don't very often get to meet people who understand the market heavily. And the market, when I say the market here, I'm speaking about stocks. Because that's mainly heavily what I do here. So I don't get to meet people who understand that heavily or the core of a company in terms of how companies really, really make money. So I get that you know that for JMA, you have a good amount of experience with it. So you've been trading. I mean, do you trade on your own? I don't know if you have like restrictions because of your role and all of that.
I try not to do anything that would
put you
against
your rules. Okay. I won't ask
so if I trade on my own, yes, I manage my own portfolio.
Oh, perfect. Stocks are everything.
It's a portfolio. It's a combination of things.
Yeah, you hear the money down there? I like that.
I have so much money you can't go into stocks only.
Yeah. Well, that's a real thing locally. I realizing. So that's good. I like that. You like the local stock market. We usually press people at the end, and if you heard Kerry's last episode,
I mean, for 2 or 3 years, Jamaica has been the number one performing stock market in the world. So obviously, it presents a whole lot of opportunities.
A whole heap of opportunity, yeah, man. Yeah. I like that. Kerry, you prep your questions for later. You told him what we asked at the end of all of these episodes.
No, I made it to be a surprise. So it's all good, man.
All right.
You know what to handle itself. So
it's all right. So one of the reasons I have you here is because you have, like I said, a wealth of experience in investing. And you say assets. I like it's assets across the board. And so most people listen to this for stocks. And one question I get asked a lot, especially anybody who's been to my girl classes, know this. Get asked about what we call in Jamaica Forex. Holy. Everybody and them cousin do it. They do classes and they say you can get rich quickly off of the market. It's the biggest market in the world. What is it, like 80 trillion or 8 trillion or something is traded every day? It really is. It really is a big market. But I have tasted enough of that market to know that for me, as great as I am with stocks and I understand business and flow, I know what's for me and what's not for me. And that market requires a level of dedication that I mean, I don't think, and you can help me here. So I'll tell you the one thing I've never gotten is hard numbers on what we call in Jamaica Forex. So every time I get asked to do a class or something, or somebody say, hey, you love stocks, you should come into Forex. I ask them the same question. I say, on average, an average person trading Forex, what's the average money they make every year? I have never been able to get an answer from anybody from that.
So if you take it from that perspective, right, and you go by average, if you look on your top traders on Wall Street or your top portfolio managers, ETF managers, on an average, if a portfolio manager is making 5 to 7% return, he's doing very good.
Per annum.
Yes.
Wow.
globally.
5 to 7% per annum.
If you do make that, it's very good. And that's portfolio, currency, bonds, stocks, whatever.
Wow.
In the context. So it depends now. So in markets with lower credit qualities, or what we would call emerging markets. Like for bonds, you have emerging markets, which are your weaker economies. Then you'd have developing economies and developed economies.
Yes.
Right. So the higher up the scale, the higher the credit quality, the lower the return that you would get in terms of interest rate. Because the lower your risk, obviously the lower your reward.
Yeah. There we go.
Right. So if you take bigger risk down the spectrum for bonds, then you will get higher interest rate return.
True.
But sometimes you're in an environment like globally now, interest rates, the spreads are so thin because typically how you price an instrument, it's benchmarked to what we call a risk-free return. So globally, treasuries, US treasuries is seen as risk-free.
Yes, because it requires America to fail in order for it to not happen. If America fail, we have bigger problems.
Yes, I give you an example now where 10-year treasuries trade at around 1.6 thereabout.
Currently, per annum.
Percent.
Yeah.
So Jamaica typically trades at around 200 basis points or 2%, 1.5 to 2% above treasuries. So the 10-year treasury yields would be 1.6, and your Jamaica 2028 bonds
1.8.
yields about 3.6 or 3.4. So it's about 2%.
Basis. Oh, yeah. Oh, well, Jamaica to them, yes, in terms of risk. Correct.
Now, Jamaica is B, single B. We are close to the bottom or the floor of the spectrum.
Well, we've gotten better.
Yes, we have been
improving. Pick up the carpet, boss. Right. So we've gotten better.
So you would be Jamaica, which is a single B, and the top of the scale would be triple A. We are like about 7 notches below
on that scale. Wow.
Yeah.
Wow.
But we would be considered risky in the scheme of things.
Yeah.
True.
But you only get compensated 2% extra for
taking
that risk.
Yeah.
So if you think of a person who manages a portfolio, right? It means you have to go and take some extreme risk to be generating returns of 7% right now. This is returns, because when you buy an investment that yield 3.6, the funding costs you something. You have to pay your clients cost. Wherever you source that money from to go into that investment, you have an interest cost associated.
Correct.
So your return, is really the profit that you make from the transaction.
Profit.
Yeah. So you have to look at it from that perspective.
Boy, I feel like we should have you on the podcast for a long time. Because you said all of the things that we say about stock.
Right. So if you think about it really and truly, then if you can generate upwards of 10% consistently, then you have a place on Wall Street.
Yeah. You probably get your own place on Wall Street. Yeah.
You have a place out there.
And I should say, for context for anybody listening, these guys are trading huge portfolios. So 10% on 10 billion, that sort of thing.
Yeah. So if you're trading
100 billion
at $1,000 or $5,000,
different ballgame.
It's easier for you to say, I'm making 10% return. Because you may make one trade for the year.
And that's it. Yep.
No, when you are given 5 million or 5 billion, that's a different thing. It's a different ball game.
Yep.
Right? Because guess what? Risk you take with $5,000. If I lose it, I'll build back.
For some people.
Do you sleep the same way when you invest 5 billion?
I want that
If you
problem.
lose it,
I want that problem.
if you lose it, do you build back? That
No, you
easily?
don't build back. You don't build back.
Ah.
Yeah.
So the smaller the portfolio you manage, the more likely it is
That you
for
can
you
make.
make a higher return.
Yep.
That is true. That is
Because opportunities are not just scalable. You can't just say, "Oh, on $1,000, I'm making $1,000. Give me 100 million, I'll make you 100 million."
true. 100% true.
One thing for sure is your emotion changes. Like,
100%
totally
true.
different.
Yep.
The fact that the emotions changes and the opportunities are also exhaustible. You know, if you think about it, I mean, you could go out there now and buy. See, you're buying and selling cars. You could go out there in Jamaica and buy 10 cars and make 100,000 each. But if I give you $1 billion to buy a car, can you buy the same amount of cars and sell it in Jamaica and make 100? No, because the population constrains you.
That is true.
So there are other things.
That
The
is
income of the people you are selling to are people. The pool of funds that they have for investment is also exhaustible. So the opportunities doesn't really scale without
All the way.
constraints.
That's correct. That's a live example because you
Yep.
remember JetCon.
Exactly.
We are
So
JetCon listed.
all right. So
Yep.
think about the stock market. You could easily on a given day sell 100,000 units of a stock. Yeah. So let's say the last
Depending
one,
on the stock, but
the
yeah.
last one that was listed, Wigton.
Yeah.
Yes.
Okay, 100,000 at approximately $1. It's $100,000. Any little man can put in a stock order, 100,000 units,
Yep.
$100,000. If you were to be selling 100,000 units of, say, NCB,
Harder. Much harder.
it becomes much more difficult
Yep.
because that's a bigger amount of money required,
Yeah.
Yep.
right?
Yep.
And if you scale up Wigton to 1 million, easy. You can sell 1 million units. It's only $1 million. Can you just run in and sell 1 million NCB easily?
Good luck.
No, you're talking about 200 and something million dollars.
Yeah.
Exactly.
So therefore, it's different, you know?
In terms of what you're dealing with versus what you have and what's available to you.
Right. So the price of the stock, you're easier to make a higher return on the cheaper stock.
Yes.
That's one.
Rule of thumb, people. I don't want nobody say
It's
Kwame said the
easier
wrong thing. Rule of
to
thumb,
make
but yeah,
a
yeah, yeah.
return. Just
On
the
the
same,
stock.
you're easier to lose, you know?
True.
Because
True.
a 5 cents move down is a 5% move.
5% move.
For
Yes.
Wigton.
Yes. Correct.
It requires a $10 move to give you 5% on NCB because it's $200.
$200.
Yep.
So
And then somebody start thinking, boy, maybe it's at 200. People will think 200 and they think 202. They will not think 210.
right,
But they think $1.05 versus the 210 for NCB. You're right.
right.
Yeah.
So when you look at it in those contexts, it's kind of different. And then when you're managing the small portfolio, like I said, the emotions. The emotions is because as a person who have traded for years, your biggest enemy
Are the emotions.
Emotions, yeah.
are your emotions.
Speak on it. How many years? Give us some background. How many years you trading now?
I'm in finance for 20 years.
Wow.
So if you think about it, like people tend to have one habit. You're in a trade and you're losing. And you're losing and you say, you know what, it soon turn. It
you
soon
don't jump
turn.
out.
And it keep going down and it keep going down. It soon turn.
Yeah.
And it pulls you in deeper
Deeper.
and
Yep.
deeper.
Y'all
Yep.
probably buy more.
And sometimes it chokes you and you lose everything.
Yep. Yep.
If the trade turns, you could go down. You say, okay, set percentages. You're down 10%, it's soon turn. 20%, it's soon turn. 30%, man, this thing will turn.
Yeah.
You're holding on. 40%, 50%,
That's rough now.
you're
Yeah,
still
that's-
hoping.
Yeah.
It goes back to 100 if you're lucky. As soon as it reaches
You jump.
105,
You jump.
you jump out.
Yes.
What that tells you about the emotion.
Yeah. The emotion is what guided you through that entire thing.
You were just willing to lose 50%
Percent.
just to make 5%.
Yeah.
That's a bad
Yep.
trade.
Yep.
A good trade is typically when a person, the upside should be at least 2.5 to 3 times the downside.
Okay.
That's considered a good
I
trade.
like that heavy kind of trade talk. I know some
Yeah.
people lost. I'll break it down for
Okay,
people.
so I break it for you. You should be when you're going in the trade, what you're expecting to make should be around 3 times of what you're willing to lose.
I like that.
That's one of the rules.
I like that because what I hear rules usually in stocks is things like only trade what you're willing to lose. I'm not telling nobody that.
And that's not quantifying properly.
Exactly. That is quantifying
If you
properly.
hear
That's a
that,
nice
then-
rule.
All right, I'm willing to lose X. How much am I willing to gain? You're not in there to lose, so you should be thinking about what you're willing to gain.
Right. And another rule is when you're trading, you don't risk more than a certain percentage of your capital on any single trade. So you have 100,000. You take it and you buy one stock. Bad trade.
I'm not going to call it a bad trade, but
Yeah.
you speaking here from the perspective of
Bad decision.
from the perspective of who though? From the perspective of you managing a portfolio of funds.
Even from your own money.
Can't tell me that.
That is saying, that is saying, if you
We
wake
hear
up
this
tomorrow and this company, there's some bad news about
Everything
this
gone.
one company, everything is gone.
That's true. That's
Right.
true. That's true.
What we do know is that you have things that are oppositely correlated. So when something go bad, something go good. All right, you think about this. I have $1 million. I buy 10 bonds, 100,000 each. Or I buy 10 stocks, 100,000 each. 3 of them goes down, 10% each. It means I'm down $30, 10% of them.
On each of them, correct.
I'm down 13 total, right? I have 7. Even if those 7 is up 5%,
Yeah.
you'd be up 70. Or, yeah, right?
On that,
7
in,
is
in
30,
terms of
yeah.
dollar figures.
Right.
I
So
get- yeah.
if those 7 go up 5%, right? 5 across the 7, that's 35 you're up. And the 3 goes down 10, right? That'll be
You're
10,
still
10,
up
10,
5%.
30. You're up 5%.
yeah,
in
you
total.
hedge your risk
You
adequately.
understand?
That's true.
So
That's
you're
correct.
okay. If you go through a year and 9 of your stock is up 10%, you're up 90. And if one goes totally belly up and you don't get back any of the 100,000, look at what happened. You only lose 10,000.
I'm with you. But let's look at the other side now.
Diversification
It's strong. No, man.
is
an amazing
is
tool.
important for
I
portfolio
think this is
management.
it's a proper case of diversification. I usually hear it in the terms of
It's just done for doing it.
doing it done for doing its sake. If you're doing it, you're hedging your risk, then sure, do it.
So you can hedge in a whole lot of different ways.
Yes.
Agreed.
That, no,
Yeah.
that
Like
we
a
know we're on.
whole lot of
Yeah.
different
Yep.
But on diversification, there are different levels of diversification, right? So you can diversify by region. So let's say you're an expert in hardware business. You can stick to hardware, that's your core. But do you buy hardware companies in Jamaica, in the US, in the Caribbean, wherever?
Yeah.
And yes, you're not diversified by the core area of the business you focus on, but you're diversified by region.
Regional.
So
There we
when
go.
one economy is not doing well and the other one is doing well,
You balance
you
based on
balance
that.
out, right? Then you can diversify you can choose to diversify not only by region, you can diversify by industry. Okay, so am I going to be only in construction? Am I going to go in manufacturing? Am I going to go in transportation and distribution? Am I going to go in finance? Am I going to go in IT? And you pick your companies
Based
by,
on that.
yeah,
You can also diversify by type, security type.
right. So
Correct.
you can diversify
That's it.
by security type. You can choose to
With
the
a
company
bond.
you like. You can buy the credit,
Yeah, you can buy their
which
debt.
is the
Sure.
bond. Right? You can buy the stock. Right? You can say, okay, there is a real estate company that leases to this company and gets revenue from them. You can buy into a REIT, which
That's
is a
true.
real estate trust fund.
That's true.
That depends on this business. So you know that this REIT income is fairly secure. You know where that is coming from. So as I give you an example who you look at it. So JPS
Yes.
and Jamaica Energy. Jamaica Energy
Partners, yeah.
sells 100% of their supply to
To JPS. Correct.
right? You can choose whether or not you want to buy into this company that sells only to JPS, or you can choose whether when JPS is going to list next year, right?
Wow.
So you can
You heard it
choose-
here first, guys. You did not hear it here first, but I know you should have known
right?
it. Yeah.
So you can choose whether you take the exposure to the parent company that has the entire market or to the
The
subsidiary.
sub company. Correct.
So you can kind of pick how you invest.
Yeah. I like to give people live examples. So I like that. I think another example of that is like the GK proven.
Right. You can pick
And
subsidiaries.
attention.
You can,
Yeah.
all right. So for example now, JMB buying into Sagicor. So JMB doesn't profess to be insurance experts, but we like the industry. So therefore, what we do,
You trust Sagicor to do
you
it and
trust
buy
the
into it.
experts to run their business, and you take an equity position in it,
Agreed.
right? So therefore, you get exposure to different areas through different avenues. It could be an equity stake. It could be a bond. It could be into a real estate fund that owns assets in this company or something. So there's different ways
There's
that
really,
you get the exposure.
they really are. I like that. But why I said initially no is because, not that you're wrong, you're 100% right. I think by now I'm notorious for saying to people that they shouldn't diversify because they've heard to do it. They should diversify deliberately. And so I start people off whenever they ask me. I always start them off with what the goal is. Anybody that know me know I start with what the goal is, right? And people usually have these audacious goals because they hear about IPO 100% in a week. I tell them, listen, not saying it doesn't happen, but you're not going to invest and get it in a minute. You're not going to invest and get it in a week. And if you don't know what you're getting into, that's the most dangerous trade. That's a bad trade. But the reason why I said no, that you're wrong. I know you're right. It's just, I have this thing I say all the time that if you have less money, you have to work harder, right?
Yeah.
So you are
You have to take
100%
more
correct. Yeah, man. So exactly. So I do tell people that I don't do it anymore because I can't do it anymore. But I will, and I did a lot when I had smaller money, put everything in one
Everything
thing.
in one thing. Yeah.
However, not blindly. I watch that thing 100 times. I pay attention to it. I go through the
but the
financials.
truth is,
And there is still risk.
you
The
don't
risk
have
is still there.
information asymmetry.
True.
There's somebody out there
That
who
knows
has more
something that
information.
I
But the
don't
thing
know.
is, how I see it is, I know where I'm okay with not knowing.
Yes.
So I know up to a point, and if this is the risk I'm willing to take. The information that I don't know, that's the risk I'm willing to take. If I get to that point, then I'm invested.
No, well, you see, all right. So let me tell you the difference between an average guy and a trader.
Go through. Hey, hold that.
The difference between a trader and my trading philosophy. Some traders are different. I make a decision typically on about 60% of information. Right? So the average person waits until they have probably about 75 to 80%
Yeah, man.
to make a decision.
Yeah, that's why we said the market is
Yeah.
slow. Because they have to wait
So,
until them see the profit before they
Right.
actually move on it.
So I make a decision on around 60%. Whenever around 80% of the information is available, I am exit.
Yes. So you jump when everybody is
So
jumping.
I can look to make 20 over 60. That's a 30% return. 33% return, right? So that's a different dynamic from when a man going in at 80 and if he goes in to exit at say 90 he's making 10 over 8, right? Look at the return, how it has shrunken. Big.
Yep. We're on
And
the
when
same
you're
page.
going in at 90 to the risk of you getting out up near the 100 or below the 100 before it turns if possible, then you are now a high risk trade. So you should deploy less if you're getting in so close to when you think is the peak.
Yeah, man. This is high level trading.
So it depends on the risk tolerance. It
Of the
depends on
person.
the entry.
Correct.
It depends on your ability to dissect information and make a decision.
And your risk appetite.
And your risk appetite.
Yeah.
So if I give you my own risk tolerance, like I am high risk, obviously. Personally, I am high risk.
Do you personally think of yourself truly, like for yourself, it's personal, do you truly think of yourself as being high risk?
Yes. Personally, I am a high risk.
Okay.
At work,
You
my
have to be careful.
decisions are within a framework because you make decisions within a frame.
Other people money.
But am I the average high risk trader? No. Because for me, for every time I win, I increase my safety base.
Well, yeah. Yeah.
No,
Some more
and
money
I'll give you what. If I start with 100 and I make 20% return, I say 10 or 5
goes into the safety.
You're not for risking anymore.
Okay. So you throw that
each
into
time-
like a safe bond.
Savings.
So each time I go and that safety base gets bigger and bigger, I can start to say, instead of putting away 50% of what I make, I can now put away 5%, 10%.
Yeah,
And
yeah,
therefore, because my safety net has become so big.
True.
So when one stock is out there, I can put $1 million on the one stock.
And you're fine.
Why? Maybe because I have a house, I have certain things covered already or whatever, and I don't have to worry. If I lose that $1 million, I'm good to go elsewhere in my safety net and start again. The average guy with $1 million, only $1 million, then he should not take that type of risk.
I am with you 100% on
so
that.
it is important to assess. That's why it's a portfolio approach.
Yes.
You making a decision with your cash, which is your only asset, should make a different decision from the guy who have some land, house, and some bonds, some equity elsewhere, and all of that.
The rich man game different.
Yeah, man. It is a different thing. You must always look at what percent of your portfolio or of your net worth are you currently invested.
Yes.
It's important.
I am with you 100% on that. So we have this thing, two things. One, so privately we talked to Dan. I think I'm coming up with this theory. Well, I know it's not a new theory. I call it the keystone strategy. And I said it to him, so essentially it's the same thing. We DCA into dollar cost average into one specific stock that you believe in the long term. Yeah. And you use that in the same way you call a safety net. Do the same thing in terms of safe stock that we trust. So maybe something will be around forever. JMMB, for example. So you're going to will be around for a while. And then you use a percentage of that money to play. Yeah. So you can, let's say if you had $1 million in JMMB and you have 200,000 outside, you can play in something with it. You can risk it highly because at the end of the day, you still have the million in JMMB. Yeah. And then the gains from it would drop a little bit of the gains into the DCA stock every single month anyway to build it up. You're right. It's a great thing to do.
You look at it as well, So we have what we call buying a return at a reasonable cost, right? I think it is scalable, means it have very good opportunity for growth. Its exposure to political risk and other risk is limited, right? This is a company that should be here in the long run. Then the exposure you take to that company is different from a speculative stock.
Correct.
Right? A speculative stock is just, listen, everybody's going to run into this thing. I run in, the aim is to get in and out first. Okay? If I go in and it move 15% in a day, I'm out.
Oh, wow. You really are high risk.
What? That's it. So you have to understand what is your objective, Don't forget the objective.
100% preach. Man, you go growing. Have you been to one of my classes?
But some people, when they get in the trade, the decision changes.
Yes.
A key thing about trading is to stick to your decision.
Yes.
That's what kills most people.
It really sounds like it. I say it as always remember your goal. Yes. Because you need that when the emotions are high.
The fact that it's going up, you went in for your 20%. Your 20% was the reason you went in.
Yes. Preach.
If you have a system where you can put in trailing stops, then it's different.
Yeah, now everybody gonna DM and asking what that is.
Trading stops is where you went in at 100 and you said, okay, I am going in to make 30%. So it goes up to 130, you exit. But I'm willing to risk 10 or 15%. Right? If it goes to 85, I'm out. I don't care if it will go to 70 and come back up. I don't care if 80 is gonna turn and I'm up. My decision was that I was only willing to risk 15%. I'm sticking to it. That's done. One bad trade, let's figure how to correct that later on. If it goes up to your 130, I'm out. Even if you don't have a trailing stop. Trailing stop now says that, okay, when it was at 100, I was willing to go down to 85 and up to 130. Trailing stop says, now that it's at 130, I was willing to lose 15%. I'm going to put my stop at 115 now. And I'm going to move up my take profit up to 150 or 160.
And stick with it.
So keep this
and if it comes down, once it hits back 115, it's out.
Yeah.
That works in the currency market, like Forex market.
It works in stocks also.
And some stocks.
But over time, not immediately.
But guess what? It works in a stock market, which is very liquid.
Yes.
Many buyers and sellers.
Yes.
Like in our stock market, it doesn't work. You don't know. It doesn't work at all.
Yeah, well, you're talking to two people who use it every day, so I hear you.
No, but in our stock market, right, You can say, I'm willing to sell here or buy here, and if it doesn't execute there, then leave it alone. But when you own the stock at $100, if there is no buyer at 80, you have to hold it.
True. Liquidity is necessary.
Yes.
There you go. So
There
even
have
if
to
you
be
get to
many buyers
it,
and
yeah,
sellers.
true.
So we don't consider our market as liquid.
No, not in comparison to an
No,
advanced
because
market
on an average day, the market doesn't trade more than about 10% off the market cap.
Yeah.
Agreed. And it's at its highest now and still not very.
So if you're only trading 10% of the market cap, and the market cap means the total value of all the stocks in the market.
There we go.
Right. So if you're only trading 10% of the market cap or less,
Then you don't really
then
have
that
it.
cannot be a
Not
liquid.
liquid.
And that 10% is also concentrated in a couple of big companies.
And the
all
10
the time.
is because of the probably 5 key or 4 key companies.
Yeah, you're looking at NCB, maybe some separate little carriers every day.
I'm not separate.
Yeah. No, separate does have high liquidity actually.
Fear.
Sorry, our level of liquidity, not a company's level of
Scotia's.
Scotia. Yeah, the financial stuff,
DK,
Signals, surprisingly.
Yeah. Right, the bigger stocks. But so it depends on the liquidity of the stock. That's one thing you have to be mindful of. Because, say for example, although our market does well, 3 years I had 49%. I think in 1 year was 37 and last year was 29.
That's your returns?
No, the market, the
market
index
rate.
itself.
Tell us about your return if you don't mind.
No, the change in the index, right, is that, how much it grows by.
Yes.
So you would have portfolios that have stocks where you might have unrealized gains where you're up 30%.
Easily, yeah.
But if you should try to liquidate that stock,
Problems.
you may even end up with your last trade being a loss.
Yes. Yeah. Oftentimes, Dan and I talk
Yes.
about that. Oftentimes when we have to come out
find
of
it,
a
yes.
stock,
I say, boy, how we do this now?
yeah, you almost have to clear the queue.
So
You have to clear the queue,
to
yeah.
benchmark
Yeah.
unrealized gains,
Mhm.
that's one thing. To exit a trade
It's
and
hard.
monetize
Realizing,
that gain is another story.
Different story.
So it depends when you're looking at people saying they're making a return of X. Well, I'd ask you, is it realized or unrealized?
True. That is strong to pay attention to. Because I was talking a lot about myself. You can tell the problems you have to deny. But yeah, you're right. After a certain point of money in the local market, you have those problems. You almost have to either just be used to leveraging the portfolio, you borrow against it, or you plan. So what we do heavily is, we usually tell people our actual personal stuff. But what we do heavily is that we plan for that. So you plan, you know that if I stock go up 100%, we exit on the next rise of hype. So usually if it goes up like 100% profit, so you pick something and you know it's going to have good results. And you say, all right, I think that might give me a rise of 50% based on, usually we go deeper, so we go into what the actual profit is, how the market usually pays attention to that kind of profit, blah, blah, so on and so forth. Then you know, okay, I'm expecting 50 or 60% growth in it when Financial Gleaner writes the article. And then a week after that, you might start seeing it fly up. Then people realize it's flying up and then it really, really flies. And you can get 60, 70. We know that if you jump 100% in something, to get out with that cash, you're either going to have to wait and do it piece, or 100% growth might actually mean 60, 70% realized.
Yeah, but then another thing, is that, remember, it's a market.
Yes.
So the difference about single or individuality, when in a market, all things are correlated.
Meaning what?
I'll give you an example now. If your child is in a class, he or she gets 85 in an exam, is that good or bad?
Depends on the curve. Depends on everybody else in the class. Correct. Yeah.
If 85 is the top grade and she comes first,
Then
do you
she's
say
a
well
star.
done?
Well, yeah, of course.
Okay.
My daughter must be a star. What you
And
mean?
if you get 85 and you come 25th or 30th, do you say well done?
To my daughter, who I love, yes. I don't have a daughter, by the way, but yeah, I get
so
what you
it's
mean.
relative.
It is relative. Yes,
Right.
yeah.
How well does a stock perform relative to the other stocks?
Correct.
So you could grow 1 year, and this could be your highest growth, and you could grow 25%, and that's good. But everybody else grew by 30 and 40%.
What were you doing?
What were you doing? Exactly. Yes.
So hence, again, another reason why you don't focus on individual stocks.
Correct.
Because
You have to watch the whole
relative
market.
value analysis is how we use to determine where do I extract value. We could say all things here are reasonable price good.
Yes.
And they will all grow. But
Who
which
will grow the
one
most?
do I pick?
Yeah.
Yes.
And why do I pick
Say
one?
it all the time. I
We
tell people all the
always have
time.
to use a relative value analysis to assess.
There we go. I say to people all the
Direction
time,
and
say if
stuff
this is a good, if XYZ is a good stock. I say,
Yeah.
listen, almost everything on the exchange is good.
Good.
Almost everything on the exchange is going to. It's so hard to get on the exchange that they've already usually passed a certain level of muster to get there. So very few things on the exchange are bad. Because you guys are here, I won't say what I usually say. I usually name 2 companies. In fact, I don't name one now, but it's fine.
It's all good.
However, I am with you in you saying that, you have to watch relative market. I want to know, however, you can tell me, maybe since you have known the industry, why don't more people watch more the market? Meaning,
Well, the truth is, because interest rate is so low now, more people have become interested in the stock market.
yeah, true.
There's usually an indirect correlation. Interest rate is high, stock markets down. Vice versa. Stock markets are up, people move their investments away from interest-bearing instruments into stock market.
Correct.
Right? So there's that inverse correlation. So as you see now, interest rates are low here.
In Jamaica.
It's low
correct.
globally.
Yes.
So globally, the stock markets are doing
flying.
well.
Well,
Yeah.
Right. Yeah.
If you look a couple of years ago, if you use Jamaica when interest rate was 20 something and
Stock
all
market
that,
wasn't
They
doing
don't
why
want
do I
stocks.
need to take risk in a stock when I can collect 20% interest on my money?
without doing
I
anything.
don't need to do that, right? So you have variables like that that will impact the performance or how much funds are channeled into. Because really and truly, why does the stock market move like this? It moves because the market is liquid and cash. People have monies that needs to be invested, and
They have to have a place to put
right.
it.
So
Correct.
one, those are portfolio managers. Speak about the individuals now or corporates, right? People looking for an option. What do I need? I can't keep this money idle. What do I need to do?
Yeah, what's a revenue hedge?
All right. If you're in an economy where your money supply is growing faster than the pace at which value is created in that society, what it means is that more money chasing same amount of value, then the price of those assets must go up.
Correct.
Right?
Correct.
Sometimes it goes up to the extent it becomes a bubble.
Yeah, so when speculation, and let's say that when speculation drives it past its the intrinsic values.
yes.
So if you find like company earnings generally are going up to the tune of 20%, but the entire market is
100.
growing 400%.
Right.
Yeah, then you know what's there's something not there. Yeah, the intrinsic value isn't there. So we're on the same page.
Right. So I mean, so you have to look at it, the outlook. So for example, I like the optimistic at Jamaica Stock Exchange, right? But at the same time, you have one other thing which you bear in mind. You have an economy which is growing at 1%. If the companies which sells mainly locally
Yeah, heavily.
is selling to a population whose income base
Is
is
only
growing
growing
at 1% per year,
Mm-hmm.
do you think that these people will have the capacity to consume products from these companies to allow them to grow at 20, 25, 30% per year?
Nope.
And some of these companies require growth rates like that to maintain the multiples.
Correct.
So therefore, that in itself says to you that this is not a sustained momentum.
Yeah, you need to see the economy grow with it
Yes.
in order to do it. Yeah, which is why there's
Yeah.
so much pressure to get above that 1% bubble.
Right.
We need 3, 4, 5%.
Yeah.
Yeah.
So, I mean, some people may say, okay, this 1% doesn't capture the underground economy and certain things. And it depends, right?
Yeah.
Speculation
do you
in
believe
Jamaica.
that? Do you believe that?
Yeah. Speculation in Jamaica is that the underground economy is somewhere around 40 to 50%.
But economists have a way to measure the unknown.
It's estimated.
Yeah. True,
Right.
but still,
So
after
fine.
a certain amount, because they
So
have to
if
spend
you
it.
want to double it, and so we're going at 2%.
Yeah. Oh, well.
It's
okay.
hard to grow 2% and maintain companies in the industry growing at 20, 30% overall.
Yeah, again.
Some sectors may grow like that. But when you look at the overall picture, there is no way
That the
these
overall
company revenues can be growing by so much, or profitability can be growing by so much when the income capacity of the population is not growing. Where are you going to get the money to consume?
I agree with you.
You may borrow for a period, but after a while, there is no more credit because
Exactly.
your debt service ratio messed up, right?
Yeah, and the local market especially, we know, runs on profit. So if you can't repeat that profit performance, the market isn't going to wait very long.
Right. So one of the things I was saying is that the benchmark, because interest rate is so low, you find that yes, the market the stock market had to grow, or prices of stocks had to go up.
Yes.
Right, because that benchmark, that hurdle, your opportunity cost. Now, if you look like in the past, rental yields in Jamaica and real estate, say apartment rentals, etc., residential rental yields were somewhere in the region of 7 to 9%.
Okay.
That's when interest rates were up at 7 to 9%. So you benchmark. Why would you buy an apartment and yield less than a paper instrument? So you think about it. Now that paper instruments are down in the region of
1.5
3 to 5,
3,
thereabouts. What you realize is that now more people run into apartment buying because, hey, why am I going to take this interest rate over here? I'm moving my portfolio to real estate and I'm going for the better return.
Yep.
And as more money chase real estate, the return goes down, right? Because price goes up, the inverse relationship. So you find that rental yields came down to 5 to 7%. And now in the reach of mainly 4 to 6%, right? It's the same thing in the US. It's the same thing anywhere.
It is.
As interest rates get lower, other asset class monies are diverted, and it's what we call smart money. People move their money for the highest return with a reasonable risk. So you find that all the other areas that you would allocate money from a portfolio perspective comes down. Real estate is down after a while. People will chase equities so much so that when you look at the dividend yield, because you buy a stock for two reasons, right? You buy it for capital gains,
or dividends,
which is the change in the price over time, and you buy it for dividends,
which is the payout.
right? And the dividends would have been, the dividend yield would have been the cash dividend that you get over the price that you pay for the stock, right? So if you're paying higher and higher price for the stock,
the yield just
dividend yield goes down, right? So I remember when our stock, JMB stock, our dividend yield was above 3%. Your stocks paying 4 or 5% dividend yield. But the market has been up now where you're lucky to get 2 or 3%, 2%.
Yeah, generally.
Our dividend yield is about 1.7 now, thereabout. So what you find is that the stock prices go up so much.
The yield
so that dividend yield doesn't impress you anymore. So all that's left for you now is capital gains. Right?
And that's a
how far do you chase this stock if you think that the company, the intrinsic value, the company just cannot grow past a point? So is it that because you want it, you just put some money in, even though you know the company not going to grow, you're willing to just keep paying more?
Not
no.
Well, yeah.
Right? So at some point in time, the market will deem the prices to be too high. And therefore, you will see correction. Now, we have seen corrections before.
Across the board, yeah. We're still seeing corrections with some stuff. I think the most famous one I asked was Kingston Wharves. Kingston Wharves.
Been high.
Been high. Been high for years. I've always watched it. It's the one stock I've never bought because it was always on a PE multiple basis. It was always very high. Recently this year, 2019, I see it corrected. Still high, but 30-something now?
Yeah, but and again, the perception is what sells it.
Oh, yeah.
Perception sells. Why was Kingston Wharf multiple so high?
Perception, yes.
Heavy perception. It's the port.
No, from Jamaica. Our trust was our own logistic hub.
Yes.
So if the bulk of your growth was supposed to be coming from
the logistics hub, up to 2016,
who benefits most there?
Kingston
Wharf.
Kingston
Transportation, the Kingston Wharfs, and so forth. Right? Those are the areas where you expect. And if you're building out, if just like now where the economy is building out capacity and we're growing, who benefits? Construction.
There we go.
So companies in construction, the cements, the hardwares, whoever, you expect them to do well. Right? If a company has equipment rental, something like that, then you expect them to do well because of building capacity. Right? But as soon as that dwindles, then it's the same thing for Kingston Wharf.
Yeah.
So you think that, okay, we're putting in certain amount of capacity and this company will do well. So I'm willing to pay more. But when you don't see the revenue growing past a certain point,
you're not seeing the profit growth.
Then you will see,
see
correction. And those who are in the money will start to sell.
Yes. And when
So
the
you
heavy
have to
money
think
people
about it
sell,
now. So
they move
if
the
you have
price.
an asset and you're up 30, 40, 50%, and it seems as if it has topped out, so now question in your head is, what's my next opportunity? I mean, I already have this 30 or 40% on the table. Shouldn't I take it and go and look for another trade? That's
Yeah.
it.
So
And
don't-
when you sell, and I'm thinking the same, and somebody else thinking the same, and then other people trade based upon trends of influencers. So, okay, I see NCB selling some stock. The man must know something. I must let me sell as well, right?
A guy on
So
Twitter saying sell out of this, so me I jump too.
Yeah.
All the time.
Right. So other people start to follow the influencers and so forth, and then you get the herd mentality.
Big up Q up there.
Yeah. You always get the herd mentality. Market. Right?
So I was saying to Kwame, that I like that you bring this up because a lot of the things that you have been saying, Dana and I say it a lot, but we don't necessarily say it in the same way. But I'm recognizing in the principle of what you do, the same principles that we do, especially the same thing, diverse. We're different in some things. Like because I started with 10 grand years ago, so I had to put everything in one. I couldn't split 10 grand between 5 things, right? And I wrote that 10 grand up into the millions, and as it got larger, I realized there are things I just can't do. I literally cannot invest my portfolio now the way I invested it when it was at 10 grand. The way I invested it when it was even at 1 mil. No, I can do like what you do. I can put $1 million into something, but I can't put all of it into one. Or if I do that, that's it. Yeah, you can't move easily in and out of that company.
I always say that, listen, for the guy who has a small amount, you can get diversification in many ways. So maybe 10,000 is not enough to split up into different shares, but you can buy into a fund, mutual fund. So I might manage a fund for 100 million, but it may consist of several persons with 10,000 each. So me managing that portfolio into several stocks and you buying units in that gives you diversification.
And exposure to
And
everything.
exposure
yeah.
to
And your
everything.
expertise.
Right.
Yeah.
And expertise as well.
But the issue
So-
comes when I don't want your expertise.
Right. So if you don't want my expertise, then it's an amount where in the scheme of things, you can afford to risk it. You know, you can afford to risk
For
it.
some people, because we have a lot of listeners. Some listeners,
Oh, yeah, definitely.
is them only 100 grand.
Yes.
Yeah.
There are some people, if you lose 100 grand, it's another 5 years
Yes, yeah.
before you
Yeah,
get
yeah.
it back.
Yeah.
There are some people, month I can take it out of my salary and I can put it back there. You understand? So as I say, like your net worth will determine a lot of your decisions.
Yeah, man. And people need to
that's
know that.
big.
Yeah.
So you have to assess your net worth and know what percentage of your net worth is in your investable format. Right? That's another thing, you know. The guy who I remember in the crisis, 2008,
Yeah.
there's one guy who says to me, I want to buy some Venezuela bonds. And I said to him, like, really? I said, yes, I want to buy some Venezuela bonds. I said, why you buy Venezuela bonds? I said, well, it's my duty to walk you through the risk. So I walk you through the risk and everything. You're clear. And you will sign that I did not solicit the business from you to sell you this bond.
Yeah.
Right? You're buying your own risk. Okay. And then one of my questions was, what's this money for? He says, I have my businesses. I have good income. This money is some money that I have for when I die. It's for the grandkids.
Okay.
Okay.
Play around money.
So, yeah.
Yeah.
So therefore, he can afford to play with it.
Yeah. That worked out for him.
Yeah.
It worked out for in terms of the Venezuela bonds. If he bought it back then,
Yeah.
it worked out
Right.
handsomely for him.
So he doubled that money.
Yeah.
But it was risky. He could have lost it all.
Yeah.
Yes. Yes.
But if he had lost it all, he would still be good because he's solid base or he's safe base. And this money he's investing represented like less than 5% of what he's worth. So what?
So
he
he
can
play
take
with
all
it.
of that cash and throw it in one bond. And then there's another client who invested in Irish bonds. And that one,
Yeah, it did not.
I
work
had
out
to
well.
take up to the level of my compliance officer to get signed off. Because everybody's like,
Why
we are
you
not
buying
selling
into
this
it?
asset.
But
And
that
I
would have
sat
worked
down-
also.
I sat down with him when that bond was trading at like 23% was the return. And when he says,
And that's
"Oh,
on US,
yes."
right?
Yeah.
Yeah.
And he says,
that's
I'm
nice.
good with this. I'm good with it. I can take the risk. And we walked through and everything. And we bought the bond. And it traded right to the point where in Ireland, interest rates became negative.
Yes. When they were just allowing you to keep some of your money safe. Yeah.
Right.
Yeah.
So when you trade an asset that's yielding 20-something% till you have to pay a bank to keep your money,
Yes.
that's a handsome return. You understand?
that-
That's really some serious return
That's strong.
he's making.
So
That's
then-
more, way more than doubling his money.
So here, let me bring it to some real talk. So the last time I carry on, I admit, so people know I started trading with JMB with them just to start Moneyline years ago. That's when I started. Forever ago, 20 years at this point. But it wasn't serious trade. My serious trading started maybe 10 or so years, and then as the market has grown, I have grown with it because I know this won't last forever.
Yeah.
So eat while the food is on the table. One of the things I used to beat you guys about is just capacity, whatever, and JMB to their credit. I mean, they're doing this. So I like that JMB is always open to
Improve,
listening. Yeah. People really like that, by the way, Kerry. People
Yeah,
really
yeah,
like that you
man.
guys are listening, and they're not saying it's perfect. Because in the space, lots of people try to pretend that they're perfect. They're not. So I like that JMB doesn't do that. So I think the thing I should know, since I've Kwame here to beat you up with, because you're touching some good points. You made 2 examples of, I guess, somebody with money recognizing that there's something valuable there, but there's high risk. And so JMB has to do their due diligence and carry people through. I'm not saying no,
Yes.
but let me show you the risk. That's great,
Right.
right? But why not? Do you not think that maybe the general level of aggressiveness, I wouldn't put on JMB alone, I said the industry. You don't think it could raise, not into stratospheric crazy levels?
Yes
But-
and no, because I tell you what, from my experience over time, I've seen people making money and all happy. And the moment they start to lose,
It's not that great.
nobody knew anything. Right? And I tell you something about when you explain risk to people. You'll explain risk to the T. And they say, yes, they understand.
But we know
And
they
they're
don't really.
making money from it, and they're all good. The day they lose $1,
How come?
nobody understood
Understood it.
anything.
Yeah,
They trusted
yeah.
Never
JMB's
explained it to me
expertise.
properly.
Yeah.
And that's it, and it goes down. And it's because the law is funny, you know. There's a case with Morgan Stanley in the US where Morgan Stanley explained the risk of a trade to a client. The client signed
To say they
to
acknowledge
say
it.
they acknowledge. When the investment went haywire, the case went to court because the client didn't.
Say them don't know.
Yes. The judge ruled that even though Morgan Stanley got the client to sign, Morgan Stanley ought to have known from their expertise that this investment option was very wrong for the client.
Really, they kept the responsibility on them. So Morgan Stanley,
Had to pay out.
so wait, but that creates legal precedence. Because that then
So it's-
invalidates.
Yes. So you have to be careful sometimes, you know. When you say, okay, yes, you explain to a man and him say him understand.
And him sign
And
off.
is he just saying he understands because him no want to look like
In-
a dunce?
yeah.
And him say, yeah, man,
But for them to-
understand and him sign.
think
and
good.
Sign, yeah.
yeah.
And it
But
good
then
until
when
they
the
lose
real
money.
thing come to the matter, man, I say, well, why?
And
My
how you
IQ
gonna
is
get
not something I would understand this, you know. My
And you shoulda know
intelligence
better.
level,
And you should have known better than to. Oh, wow.
Yeah. So you have to think about the spins to it.
That is true. I get it now, but you
have
know, if you make fear alone control it, you almost won't ever do anything because I see often opportunities, right? So how I beat the industry up these days is around the analysis and mostly stocks, but around the analysis and recommendations. Now, I don't expect the market to be crazy. I understand they have to be careful because you have to talk to everybody, the risky and the very, very risk averse. But you reach a point where I see people like you look on things and you're like, this is an obvious win or this is an obvious
No, but
danger zone.
What the market doesn't do, you know, you have to be fair in that the market does credit analysis. Yeah.
Meaning can you get back this money that you're
Yes,
lending
yes.
XYZ?
Yes.
Yeah, okay.
Yeah,
Viability.
yeah.
So it's not growth and business
Right.
is
And when you trade, there are two different trades. There's a strategic trade and there's a tactical trade. A strategic trade says this company over the long run is expected to do well. And if you buy and hold over a certain time based on the trajectory of the market and all part of things, taste preference, all that, the direction of this company should be well. A tactical trade says you buy at 10, you sell at 15. You buy tomorrow versus you buy the next day and when you sell. So the tactical trade is what helps you to know when to jump in and out within a
Timing.
short period of time. That's a tactical trade.
and the shorter you're playing, the more tactical you have to be.
Right. And the more risky it becomes.
Yes,
right?
true.
So the question is, our investors in our stock market, are they tactical traders or are they strategic traders?
traders.
Are you buying a company and say, over the long run, this company will do well because the industry in which it is will do well and it is a market leader in its industry, right? You have to look at it that way. Now, I'll give you an example. I have a friend who has been buying NCB from it. It was around $3.50.
Oh yeah, we have a couple of those friends. We have a couple of those friends.
Yes, we do.
Wow,
So,
wow. Very
his
rich friend
belief-
that is no
His
around it, yeah.
belief was that the economy has to be driven somewhat by the financial sector.
Correct.
And we've seen it.
And that this entity is an entity that will be a force to be reckoned with.
Well,
So
So-
said, so done.
Right. So he has been building a portfolio from then.
I like that. I
Right.
like that. Shout out
So-
to that friend.
There are people who I know would jump in and say, okay, when Lasco is going to list, we're going to buy it. Why? Because GDP low, people need an alternative maybe from the Grace and the name brands per se. So there's a segment of the market that needs this offering. So the company should do at least reasonably well.
Yes.
So you buy in your IPO or whatever. You say, yes. A Supreme Venture come and you take a perspective. And you say, okay, the poorer countries, some people are without hopes. What do you think they're going to do?
They've gambled
Gamble.
heavily.
What's my option to become rich? I should buy the lotto. I should go play some cash pot. I should do something. So therefore, you know there's a place for that. You take a fundamental outlook on the industry and the
There we
market leader in the industry. You take that's a strategic trade. So when you take those perspectives, you buy the stock and you go sleep. You not check tomorrow wait to trade for.
Yep.
Next week you don't care what it is trading
Yep.
at.
Yep.
Because you know what's funny, like you ever really and truly when you look on the line over 10 years and you see it look like this. That was not the market.
No, when you zoom in it, it fell,
You see that
Choppy.
zigzag in
Zigzag and the
there?
fair, yeah,
Line up
man.
is a
Yeah.
zigzag up.
So that thing is
Up and
what
down.
kills a lot of people.
Yeah.
In that you're not able to stick to the investment decision to say, this company over the next 3 to 5 years will be a force to reckon with. And I'm going to buy this stock and I'm going to forget about it. I don't want to hear where it's trading next week. I don't want to hear where it's trading next month.
Yeah.
That's not
Lock
why
it
I
up.
bought it.
Yeah.
That's a tactical trade.
But that's hard for a lot of people, you know.
No, so that is why I'm saying the confusing thing is that some people takes a strategic decision but behaves in a tactical way.
Yes.
And therefore it gets them restless.
yes.
You bought it because you believed in the company.
There we go.
Not
Stick to your
because
goals.
of the behavior of the market over 2-3
Yo,
months.
everybody that got grow on the listening, because I'm saying exactly what I say.
You
When people
understand?
ask me what's happening with XYZ,
Yeah.
I go,
Why
what
buy
were
it?
you thinking when you bought it?
Yeah.
Yeah.
Brethren messaged me 2 days after QWI list. So when
Oh,
it,
yeah,
when it
man,
did the
I
drop
thought
for the
also.
first day, I say, yo, I think I'm going to sell it. Oh, yo, we spoke a week ago and you told me you were buying this with the outlook of a year. It dropped in one. Why are you worried? But I realized really it's a shift because QWI dropped and I messaged me excited. I'd be excited too. And the more it dropped, the more excited to get. And then somebody else I know is out there going, no, it dropped it one little bit. But in my view, because you're right, in my view, I don't usually invest for dividends. I'm a cap gains and when I had the smaller money. But where I'm now, I have to look for it. And in my view, like you couldn't get QWI at 108. You couldn't get it at 105. It IPO'd at 125 a little bit. And really and truly, if you bought it at 125, chances are your average cost is $1.30. If you told me 6 months ago that QWI would have list and I would have been able to buy it at $1.08, I would have been excited, right? But that is a totally different shift because to somebody is, I buy it at 130 and now they're 108. So you're right, how people think about it has to shift. That's why I try to get people to get the thinking.
Yeah, but
somewhere in the line,
it goes back to the principle that I tell you that the biggest killer in trading,
emotions. There we go.
Emotions.
Yeah.
Like emotions is a single biggest killer. Not having the discipline to stick to your investment objective kills everything.
Yep.
Totally.
All the time. How do you handle it? Like as a human? Because we know what the book says, but how you handle it as a human? Because the biggest thing for people, right? They put it in and I want to buy Select F. I think he bought it for 2 years. I said, that's great. In 2 years, the financial space is going to grow naturally. JMB is going to force it to grow just from that upcoming thing. No. If you bought with that in mind, I understand you believe it and you're into it, but then your friend got to tell you so they make 40% on X in a week. And suddenly you start thinking about it. But it's human, I get it. Yeah, but
I'm not saying that I don't review my decisions, but I buy a stock
and you stick with it.
And
you stick with your decision.
Right. So you have to first know, who are you? Are you a tactical trader? Or are you a fundamental trader? Right? Am I in this because I'm looking the quick pick? So if you're in it looking the quick pick, you monitor it over short periods for your best entry and best exits. If you're not in it for that and you're in it for the long term, chances are if the company grows so fast or there's some positive about the company in the short term that makes the price spike, it could spike much more in the long term.
Yep.
What stops it from spiking more?
Exactly.
You have to always look, review your decisions, yes,
constantly.
but you can't be two things at once. You have to pick one or pick a larger weighting to one.
Yes.
It never changes. It doesn't matter if it's currency. It doesn't matter if it's stocks, if it's real estate.
Always the same thing. It doesn't matter where it is either. Because the principles are in the American market, in the European market, in the Jamaican market. It's the same principle. Can you hold it out? Can you stick to your decision? And can you ignore what's going on next door? Because a lot of people lose money just on that shift. I jump from this, then I jump from this, then I jump from this.
And it's like, guess what happened? You have this stock. You bought it with a 3-year horizon. A year and a half in the thing. The stock doesn't move at all. And you start to get impatient. And you exit. Okay. Maybe slightly down, maybe flat, slightly up. You exit. 6 months later, the stock went up 40% because in your 3-year horizon, which you originally had, things are just coming through. The pipeline of their missions and stuff just coming through. Guess what now? You get antsy. You have the emotion to say, look how I was waiting on this.
All the time.
You know what you do now? You're running back.
No, you're buying 40%.
No,
you're buying 40%
higher price.
Right? And so your risk is this much
I'm
more.
not going to call him a shout out to my Cygnus friends. Meaning, let me be clear for that. I don't want to get in trouble. My friends who, this exact story you're describing happened with Cygnus stock. Because I said to them, I said, just wait, no man. You know the Jamaican market. Because when we move quick and then we stay there. Yeah, and we will stagnate for a year and a half. Which is exactly what Cygnus did. Stagnate. It stayed at $10, $11 and then it just flew to 20.
And guess what? You have to understand the business. It's your duty to understand the business. If you're going to invest in the business, you need to understand. And if you don't understand, then you need to have a rep, an investment advisor that thoroughly understands. Right?
100. Say it again, because people are beating up for this.
So you have to have a good investment advisor. That's if you're not the expert. You need it. So say, for example, a Cygnus, their business model
can be complex.
Could not blossom in 6 months.
Exactly. Yes. Cannot.
It's a startup.
And they are investing in startups.
Yes. And they're investing in startups. So therefore, there must be a period of time which is these businesses have to be nurtured and so forth before you start to see
Any
the
return.
return.
Yep.
Yeah.
Yep.
So I didn't expect it to move in the first year. I never expected that.
Neither did I. And then the
Upsize.
upsizing, the way they upsized, I believe.
The throughout the valuation. So it never made sense to me.
So if what I do now in my stock portfolio is it's in two.
Tell us.
There are stocks that I buy to hold, and there are stocks that I buy to trade.
Okay. Okay.
And there is the same stock that a portion of it is to hold and a portion is to trade.
Okay.
Right? So, okay, I buy a position, say 1 million units. Maybe I decide that when the stock moves 25%, I'm going to exit 20%. Maybe when it moves 40%, I'm going to do another 20% and tier it. So at least I start to take some gains going up the ladder. And each further up it goes is the more covered I become.
Yeah, you're increasing the safety.
Right. So I'm increasing my
I
safety.
really like that. You know, I'll
position.
find a way to put that in.
So
in text
you
form for
have to
people,
figure
yeah.
out how to manage your portfolio
Yep.
that way.
Yep.
So you know that,
Yep.
okay, I'm waiting for the top, but I'm not waiting with all of my position for the top. No, I would have taken off some gains off it already. So if you take that approach, then yes, you can behave in that way. And take some profit, take some profit, take some.
And you say, and you're
manage that
sure you consider yourself high risk?
Yeah. I'm high risk, but I'm a sophisticated high risk investor.
Okay. I think it's just
That high risk is different from stupid. No?
no 100%. Yeah. Because
so
I'm
you-
described as high
right.
risk. Then I described as high risk. But
High risk means high risk and sophisticated means I'm using information to
constantly.
make. Yeah. It's just like when a man say, you make decision and gut feeling, right?
Oh.
There's gut feeling, there's gut feel.
Yes. Yeah.
There's gut feeling ignorance,
and then there's gut
and there's
feeling.
a hunch because of your experience,
There we go.
right?
There we go.
So
There we
because
go.
of your experience, there you understand what are the tickers, what are the indicators that says it's time to do this, it's time to do that. And it plays on you, and therefore you make a decision.
There we go. We call
That's
it event
different
based
from
trading.
a man who just run in and say, boy, I'm a gut feeling, say this going to move and I'm going to buy it. You know? So it's different in that context.
Wow. And as Kerry was reminding me earlier, we moved completely from Forex. No, so we're on the same page in terms of stocks, though. It's so funny, but I made my portfolio high risk, but I knew it was high risk. And it's the same way. When I say high risk, there weren't sleepless nights. If it's sleepless nights, it's because I'm paying attention to the portfolio, right? But it wasn't stupid. So, yeah.
Before you say you're high risk, what percentage of your net worth would you say is invested in stocks?
Me right now, currently, my net worth.
Yeah, your net worth.
I don't actually count my net worth, and I keep my money in stocks. Let's put almost 100% of my money in
Your
stocks.
money in stocks is not
Yeah,
your
true.
portfolio in stocks.
True.
Do you own a house or an apartment?
There are things that I have
Does the apartment
Shares in-
value more than your share portfolio?
at this point. No, my portfolio is kind of good. I'm sorry.
Alright.
No,
Do you have like land or other investment?
no, I get what you're saying. No,
Do you have
I am
another
high
business
risk.
that
No,
adds up. So because
90% of my money is in stocks in the local stock
90%
market.
of your money or
Of my
your,
net
or-
worth,
net
of my
Your
net
assets.
worth,
Of your
my
net worth.
asset, my net worth is in the Jamaican stock market.
All right.
Yeah.
Then the other thing is the age group.
Yeah, well, yeah.
How much time do you have to rebound?
To rebound.
Yeah.
You mean like if
If
something go
anything
wrong?
goes haywire,
I mean, I have some time. I'm 33.
you have 30 years of working life left.
Oh, God forbid. But
Yeah.
yeah.
Put it in context, there are people graduating from university at 30 and they have nothing yet.
True.
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 So that says that you're in a position where you can do a whole lot.
Oh, yeah. No doubt.
So in the context of things, you're not really truly high risk, If you were to reach 55 and 60 and you take that same 90% decision,
yeah.
that says
Yeah, I
you're high
couldn't do it.
risk.
Yeah, I couldn't do it.
Because
I couldn't
guess
do it.
what? Your recovery time,
At 60?
yeah.
Well, I'm assuming at 60. So here, I manage my risk, because also I don't have any kids. Yeah, and I'm married.
But even,
yeah.
even if you take
No,
out
it
that,
matter
just
if
look
I
at
had
the
kids.
recovery.
I couldn't do it.
Just look at the recovery.
Yeah, the
the
recovery, you
time,
have time.
that you
have
have
time.
left to work back this money or make back this money in business
True.
is a lot.
True.
No.
True.
So therefore, yes, you're allocating a high percentage, but it doesn't really make you a high risk person because you have a lot of time for recovery.
True. And then on the tactical level, I mean, you think we're higher risk tactically than I? Tactically, in terms of how we trade.
Yes, so you might have concentrations. At times, okay, so you have 90% in one asset class. Fine. Within the asset class, you ever put 90% or 80% on one stock?
I mean, in the past, not anymore. I can't anymore. But in the past, I have.
Right.
Yeah.
So that in itself shows that you appreciate diversification. You might not diversify by asset class, but you diversify by industry within an asset class.
True.
So you're buying in banking, you're buying in manufacturing, you're buying in the distribution industry, you're buying in hotel and tourism, so you're buying in gaming. So therefore you're saying, although this asset class is risky, I'm gonna see how I can best manage the risk in this asset class.
Yeah. And
So
risk is a hallmark of reward. So I don't, you catch me in transition here because I am moving, I'm forced to move how I invest. But I wouldn't tell you, say, if Trans Jamaica listing and it coming out
You can
that,
take all your money then.
if it could take all my money and it's
and
a great deal, and I honestly think that at worst it's going to go 30%, I'd put every dime in there.
If you think that.
Yeah, if I think that. So I believe in the Buffett statement that people don't talk about, which is put all your eggs in one basket.
Watch that basket.
Pay close attention to that basket. And when I was building up my portfolio, I had to do that. So those were the nights where
That's why I'm where
doesn't
I'm
take
now.
that approach, you know.
no, he
Buffett money
can't.
different. He can't.
He can't anymore.
Buffett money is very different.
No.
Even from the early stage, Buffett's philosophy has always been, I look at a company, I value the company, I see growth opportunity, I buy it, I forget it.
Yeah, but that's not.
Buffett never speculates on the stock market.
Yeah, he doesn't have to.
He buys companies with strong fundamentals based upon his
the
assessment.
Yeah, but that's not anything that that's not going against what he said about watching put everything, put all eggs in one basket.
Yeah, preserve the basket.
Put all eggs in a good basket, then you're good.
Yeah.
So that's the same with us.
But we, of course, don't have Buffett money, so we couldn't do Buffett moves at the time. In fact,
you still buy companies that you believe are solid and strong.
No, undoubtedly. So we don't put money.
Hold them.
We don't put money in things that we expect not to do anything other than grow. And we are also very event based. I know I'm event based, meaning. But here's a free one. I'll throw.
When guys are timing.
We don't go. Go ahead.
You guys are timing. So if you know, timing is important to us. So if I'm going to be in a stock and I say, boy, I know X time this event is going to happen that will drive demand in the stock, so the price will go up, say earnings or some other events happening around that company. Then I see like 6 months down the line and nothing going to happen for that stock in my view for that 6 months. I probably wouldn't invest until near to the event.
So fine enough. So your approach is more the tactical approach.
Very heavy.
Right?
Yeah, very heavy.
Very
Definitely.
heavy.
You're not looking on the fundamental side of the business to say over time, a longer
I look at the
period of
fundamentals,
time.
but not necessarily for very long horizons. No.
Yeah. So I'm saying once you trade in the short space, you're considered the tactical. You're not
And
taking
you have
the
to.
long-term trade. And I understand. For that perspective, your ears have to be closer to the market.
Must. Every day. Have to watch
the guy
the
who
news.
takes
have
a
to
long
listen.
term, you buy it, you forget it.
Yeah.
You know, no one again you check in, but you buy it, you forget. The guy who's doing the tactical, you have to follow the news. You have to know what's happening in the industry. You have to know what's happening with
have
the
to-
peers
That's not
in the
problem to me.
industry.
That's fine, man.
You have to be on top.
You have to watch
of
every
the
financial.
information.
Yes.
Yeah, you have to know what's happening globally. Is this a company that's exporting? You have to know what's happening with people's behavior. Is taste and preference moving? Look at Kodak.
Yes.
Is taste and preference changing? You understand?
Yep.
What do I see happening for this company down the road because of political factors? Venezuela, you can't trade with Venezuela anymore. You have stuff with Cuba, you have whatever, you understand?
Yeah, you have to
Things with China.
Yeah.
Growth rate slowing down because of two superpowers' egos at each other. Right? So what does it mean? look with Yahweh and all these other people. There are stuff where you look at and you
It
say,
impacts them.
okay,
Correct.
what
Correct.
can impact them on a larger scale, just outside of their economy. Because you're exporting. What percentage of your revenues comes from the domestic market versus the local market?
And what are the drivers of each of those
and what are the
markets for you?
drivers of each of those markets and so forth. And then you get into company specific info. What is the management quality of this company? What is the investment horizon? What is the philosophy of the company?
What are their stated plans?
Yeah.
Because sometimes they just straight out tell you, and people ignore. The
Does
local
this-
market ignores stated plans all the time.
All the time.
What is the construct of the board? What's corporate governance like in the company? So yes, they say they're going to do something. Who hold them accountable? You know, when you start to get into all of that now, then you're on top of the information around.
And your
doing
risk
the
becomes much
and your
less.
risk becomes less.
So that's why I don't think of myself as high risk. Because high
Because
risk
I
for
have
me-
to do that.
Yeah.
I have to look out. I have to manage my risk
Same
to a
exactly.
certain point, and then I'm fine.
Yeah.
Otherwise, if I do it, then I can't invest based on just what Randy. If Randy said, then I look at this. I have to look at it more than just Randy said.
Same thing. He said something to me. Well, when we say things, so we used to use in proof. Because if I say something, I
Then
show you it,
show me
and then
why.
we still go dig through it, and still, I almost call myself risk averse, but I know within the industry I wouldn't be considered risk averse. But
Yeah.
I don't like risk at all.
Yeah, well, one of the things, as your portfolio get larger, your risk appetite changes.
Yeah.
Your risk appetite
True.
definitely.
Yeah, definitely.
And as you grow in age and responsibility, your risk appetite definitely changes.
And what you're able to do, thankfully. If you did it right, if what you're able to do
Yeah.
does change. Yeah.
Yeah. So a lot of things will impact the behavior of an investor. The
Yeah.
key thing is to know like from my perspective as a portfolio manager, I have to know my customers. I have to know their philosophies. I have to be in their world. I have to literally know when you're making a decision that is not even in your own interest.
Big point. Because everybody hear the big money and then come to and say, no, mama, want it. You're right.
And I tell you what, let me tell you, just like business, nobody knows when a man tries 100 times and failed 99 and him get one that bust him big.
Wedding boss.
Everybody see the one bust and say, boy, them
Yeah,
man,
man.
they're lucky.
Overnight.
Nobody
Overnight.
knew the 99.
Yep.
And it's just the same way when a man a trade. Guess what? When him do a bad trade, him not run come tell you.
I'm not talking about it.
Oh, that's
He
true.
only tell you the good trade. So he tells you the good trade and he says, boy, I make some money and this and that.
And them don't tell you when something
him
go wrong.
lose, him hug it up and him say, boy, I starve. I forgot make about this.
Yeah.
But guess what? Him don't tell you.
So one of the things that people ask us a lot is to tell them generally, like what have you ever gotten wrong? Like what are the bad trades?
Yeah.
What are your bad trades? I'm not tourist for saying that I've never lost.
I started my first trade. My first trade was a bad trade.
Yeah.
Randy mentioned.
Just in conversation.
So in a conversation, I wasn't even contributing to the conversation. I was onlooker. And he said CWJ was talking about the company. And I took it as, oh yeah man, go buy CWJ. Bad move.
So this is before the delisted. This was when, that at time when they're below $1, then they're up and then it comes and say, you hear me talking up here? And him right come out of it up below
All the way
$1.
down.
And funny enough, because I would have sold. And then when it hit below $1, I started to buy again. Yeah.
So he was doing that. So him talking at the top, say, man, money makes that. Him buy. So when he's talking about buying again, now looking at say, wait, buying, what do you mean buying?
Yeah, this thing just lose, yeah. But to me, I'm saying I can't see these guys staying listed. This was about a year or two before they even delisted. Yeah. So I said, I don't see these guys listing. If they're going to delist, I'm going to have to offer some money. And on the local market, the second money is offered for a company. The stock flies on anticipation.
Right.
Yes. So it was me thinking of that 2 years before, looking at the fundamentals and seeing it and jumping in and out. That it. And that's how he learned. It was a rough lesson for him.
Yeah, so he was making an uninformed
decision. But
he didn't even have a perspective.
None.
And that's what kills a lot of people. They hear somebody else saying, boy, my stock portfolio is doing this. And guess what? I need to be able to talk about my stock portfolio when I'm around other people. So I just run and put some money in the stock market. I don't even care too much what I buy because I know I have a stock portfolio.
How do you deal with that? Because you must get the same thing. How do you deal with it? Because for me, I'm almost afraid to talk about stocks.
Yep.
Because like I talk to Danai when we're doing the podcast or when we're driving to the podcast or like that's how we talk privately. Because if me and him sit down somewhere, we're around people that know us and we talk, Any stock we mention people buy. I get DMs all the time. I buy signals because you talk about signals. I said no, but I said don't do it because I'm doing it. But
I advise people based on risk tolerance that I know them to be. So I tell my peers.
No man, I'm talking work. I know you're good at work.
If my friends, you're young, buy growth stocks.
Okay.
Buy growth stocks when you're young.
Yes.
Right?
So take the risk while you can take the risk.
Buy the growth stocks now. If you're getting older, buy mature companies. Buy established companies, the returns will be less, the dividend yield might be decent because them shareholders need the cash flow. Right.
Huge gap gain.
Right. So therefore, your stage of life dictates the segment in which you have the higher concentration.
So how do you handle the people who, because they're not going to tell you when them do it, them tell you afterwards. I only hear two things. I hear, boy, I make a bag of money, You're really good at this thing. I say, you make a bag of money of what? I never told you anything. And them said, no, you never did mention Pulse. I said 2 years ago, but I was just talking about it. Well, it worked. As opposed to, I also hear, then how come you tell me to buy XYZ and it dropped? Because you only hear after the fact.
Guess what? Because you are a tactical trader, timing is important.
100%.
So you said, buy a stock today. I didn't get to buy it till next week, Wednesday. The market could have moved 15% a day.
Yeah.
Is it still a good trade next week? No. It's still not a good trade. You understand?
Yeah.
In my mind, as a rookie, boy, the man said buy NCB. But it's just 4 days or 5 days later.
I'm still buying.
Guess what? The price move up 40-50%. Is it still a good trade? Maybe not.
Yeah. That's boys.
You understand?
Hard. So I get the responsibility that you have,
Yeah. So you have a responsibility to understand where they are. Go to your advisor so they can educate you, so you know that. Listen, timing, and you speak, I would say loosely, because you say buy NCB. Yeah. You didn't say at $210 NCB is a good buy, or between 200 to 220 is a good buy for an exit of 250 to 260.
Well, let me pause and say I don't ever say that because I'm not a licensed financial advisor. I am not on that.
No, but I get you. Your friends. Yeah.
So when I talk to my friends, what I do know is anybody asks me, close to me, ask me what stocks, is always the same question. I say, what's your goal? That's the first thing I ask them. What's your goal?
Always.
And always, what's your goal?
Always need to focus on your goal.
But bring me back to the beat up with Kerry now, Kerry, because people love JMB and they're coming for that. But like I went to JMB 2 weeks ago, the office is packed now, which is good. Because I am a JMB shareholder. I am a JMB shareholder as of today. Yesterday's the 20th. I am a JMB shareholder. But what are you doing? And this is just an operational point because I know it's hard. But what are you doing about that? Because people want to come in and everybody go expect to talk to a Kwame when they're coming to JMB.
Geez.
They're going to want that. And I know that that's physically impossible. Because one, you're not an advisor. You're handling a huge portfolio.
So in finance, there's what we call Chinese wall. Right?
Okay.
The guy that manages the proprietary book doesn't deal with clients. None at all. None at all.
Like, say it again for the people to hear.
Yeah.
So they will not see you because of your role.
So I do not advise clients.
I get that. Actually, if I can tell me if I'm right or I'm wrong, you actually can't do it because you may be in your role privy to things that it would be unethical for you to speak to clients about.
Right.
Perfect. I get that.
I may be taking a decision contrary.
So what the advice is? Yes.
So we keep separate handles.
Completely.
We have what we call a client investment committee that makes decisions on behalf of client. And there is my team, the trading team, which makes decisions on behalf of the company.
So you handle Mr. JMB versus the JMB client.
Yeah.
So you highlight that and bat it over to your side again in a Kerry.
Different.
Bat it over to you.
Yeah.
So how are you going to handle the press, Kerry? Because people want it. These are the experience that he comes with. I know. That's the first thing I learned when I spoke public about stocks.
So the experience comes,
But they want that when they walk in the door.
No, but you get the experience because what happens is that we have discussions. The research team, the trading team have ongoing discussions. And research is a team that covers the credit quality and software and the recommendations. So on a daily basis, trading, I speak to guys in New York, you name it, wherever, all across the Caribbean, London, wherever.
Especially.
Right.
Yeah.
So I'm the ground I'm the ears on the ground. Yeah.
So they come to you all the time.
Yeah. So I'll be saying to them, you know, today, based upon the reaction of such and such, I'm getting this feeling, I'm getting this reaction. There might be some information which we haven't uncovered yet, or so forth. Or Trump said this, and this is the impact it's
XYZ,
having,
yeah.
and so forth.
Yeah.
And then they will say, well, okay, on a fundamental basis, this is how we expect this decision to impact an economy, a country, a company, a region, and so forth. And we tie them together to say, this is the behavior on the ground, this is the expectation of the bigger picture. You tie that together, and then you provide an outlook, which research uses to advise the clients.
The clients. So
I mean,
Because the same information research use is the same information
that you use,
I
that you
use.
get.
Because I want that fundamental perspective as well to help me to understand what is happening on the ground.
Ah, yes.
I mean, just to go back to your question, Randy. So the first thing, I mean, when you come into a JMB, and I mean, this is our philosophy, and every company is different. One of the first questions we ask you, apart from, of course, understanding your goal and your level of risk tolerance, is first of all, how much discretion do you want to have over your portfolio?
Yes.
Do you want to maintain full discretion as the client, meaning you make every decision of every asset you want to buy and sell and when and how much? Or do you want JMB to manage that, to have total discretion in that
Or
regard?
do you want JMB to make recommendations approved by you?
Exactly.
There's that middle ground where we make our recommendations, but you have to sanction it.
Exactly.
There's the one where you just give us outright authority and say, do what you want
and
to do and generate
Returns.
something.
Okay.
Correct.
Over X time. So you
Yeah.
give them the goal and whatever.
Yeah.
Correct. So the most popular route, incidentally, are those people who actually give us the discretion. Because the reality is the majority of our population, with all due respect, it is what it is based
Not
perhaps on our
investor
economy.
savvy.
They're not very investor savvy. They're not sophisticated.
Not-
And so if they
financial
say, look,
literacy is
JMB,
low.
you're the pros, you have the Germans and the bright people like Kwame working and doing the thing. You guys just take it and run with it, and you open a wealth builder or you go into a unit trust and we will manage it for you. For those people now who want that level of control, the challenge you have again is the volume, because you have the number of clients to deal with who want to maintain that full discretion or the 50-50. But then now within that, it is the strategic investors versus the tactical ones. So what we do is, go back to Kwame's point, is that we empower you with the information.
Yeah.
So for us now, on our website, there is an insight section where we have all of our research sovereigns on the different sovereigns or countries, the publicly listed companies. There is a weekly market color newsletter that you
see
can
that.
sign up by email. You get it every
But
Friday.
the market color look weak, man. Then stop your recommendations now, man. I don't know why. You give
I
market
tell you
info,
why.
but no
I
recommendation.
tell you why. It's a legal matter. When you make a recommendation, as compared to when you do a relative value analysis, I may say to you, the relative value says, if you're looking bonds with credit quality B, these are the B credits. Of the B credits, Jamaica looks the best. You can choose
After
what you
that.
want to do,
Okay.
rather than me saying buy Jamaica. See
Okay.
the difference?
Yeah, I get you. I get
Stock, same thing. You might say the outlook of this company is pretty decent based upon fundamental 1, 2, 3, 4, right? And so therefore, it's up to you if those are the things that you value to make a decision. As well as we may be so compelled and we say, okay, we think this is a buy, we think this is a sell, we think this is underweight or whatever. But guess what? It still doesn't say sell at 10, buy at 5. And so you have to look back on the report as well and know at what point in time, how dated is a report.
Yeah.
True.
Because guess what?
It was at
Like
that
that
point
market
in time.
color come out
yes.
on a Friday,
Yeah.
and God, suppose we had said NCBs are buy. You not read your email till the following week, Wednesday. Is it still a buy?
buy.
Having
That's
got
a-
You
email
have a
sent out on
responsibility
Friday.
because the key thing about information, it must be timely, it must be relevant.
Yes.
You have to know that. If it's not timely and relevant,
Then you
Don't make no sense.
you've lost, yeah,
No
just like the
sense.
gold.
Out of context.
But then I got
So
lost.
that- yeah.
We've gone so far from Forex. I tried to go so far from
Let me
Forex.
touch
but-
a little on the Forex.
Yes, please explain.
So
First-
in the Forex market, you have two aspects. You have what we call a spot market. You have a forward, well, three. You have a spot market and a forward market. And then you have what we call margin trading.
Okay. Yes, and that's the popular one in Jamaica from like not from an institution, but just
Yes.
people. That's one that people do on
If
their
we
own.
go back to the whole all-in saga.
Days,
Oh, yes.
yeah.
Good. So the spot market is where a guy who really needs the actual delivery of the currency. And he needs it T plus 2. Within from T to T plus 2. T today. Transaction date
Plus 2 days.
plus 2 days. That's a maximum of 2 days. That's a spot transaction. Beyond 2 days is referred to as a forward contract. So you're saying, I will buy for a future date or I will sell for a future date a fixed amount of currency at a fixed price. Right? Still actual delivery of currency.
Okay, yeah, but it's almost futures, forward
well,
contract,
forward
forward,
contract.
yeah.
So that's the delivery of the currency. You can trade a currency market using futures. Difference now is that there's no delivery or an option. There's no delivery.
Of it, yeah, Chris.
Yeah.
You just it's just
You
the
don't
contract
have-
itself that you're moving
right.
around, yeah.
You can say on such date you have the option to do, and you may exercise the option or not. If you don't exercise and it is out of the money, so let's say I say 1 year from now, I want to have the option to buy US at 150. 1 year from now, it could be at 140, and I don't exercise the option,
So you just keep on.
and it passes, but there is a fee for the option. Right? So you pay the option price and you get that option to buy at the price or sell at the price. There is also where you can do what we call a non-deliverable forward, where you say, sometime down the road, I want to be benchmarked
Against the current rate.
against the current rate.
Yeah, let's get this
My bet or my price will be 150. And whatever the market rate is, you will be benchmarked against the market rate at that time. So if I'm buying at 150 and the market rate is at 155, you pay me $5 times the amount of currency. And that's my and go about my business.
Yep.
And
There's no delivery of the
Let's
currency.
get the spread.
you just get the
Right,
spread.
just the spread. If it's down, I pay you, go about my business. That's it.
I should pause here because I know you're explaining the three markets, but I should pause here because especially the first one, the forward contract, I know that's a big deal these days with the movement of the
dollar
new
in the local
FX market. We have a floating currency as we should have,
Yeah.
and of course it's demand driven, so it moves up and down as demand requires or states. Of course, the business people. I have a friend who that's her thing. She beat her bad because of her month she buy from US. Blah blah blah. I don't know if you're preempting. Jay may be coming to with something to help these people.
So for the forward market, one, both from an industry perspective as well as from JMB perspective, we are looking to offer forward contracts.
Soon and very soon.
Yes. And the industry, there's a trust by the central bank as well for the industry to provide an avenue or some suggestions around how this will work. Right? Because what we are trying to do is to smooth market flows. There are times when there's so much US selling in the market and nobody wants it to buy.
Yes.
And then there's a time when so much people want to buy and nobody's selling. And therefore you get spikes,
Yep.
in either direction, right? And seasonal flows. So some of this is caused by what we call, like the Christmas season, when people are shopping for goods.
Yeah,
to
generally
stock up.
people buy it in, yeah. You
have
get it in
times
August
when you
also,
have
knowing back to school.
reinsurance, you have dividend off foreign companies, right? So just to touch on a point where Jamaica over the last couple of years has been growing from a trust of FDI flows. We go overseas, we get people to come here and build. These foreign people, we build hotels, we build businesses, through their support.
Yeah, foreign direct investment.
Foreign direct investments. Now, when you have foreign direct investments, what it means is that the investor either borrowed money overseas to invest here or is using their own capital. If they're using their own capital, they will need dividends. So therefore, at some point in time, they'll have to buy currency
And it has
to
to
pay
go
out
outside.
dividend.
Correct.
Or if you're making loan payments, you have to buy currency
Dividend.
to
To
make
go
your
out.
loan payments. So that's one demand.
Mm-hmm.
As well as when you're growing, you're building out, you're using material imported from overseas. So when you hear our companies and our countries and our trust to grow, what it means is that
It's pulling
your
in
current account, which is your export minus import, will widen because you're going to be importing more. At least in the interim, you're going to be importing more to build capacity. Later on, you hope to export more and narrows back that gap. So what happens is that when there's a growth trust, there's higher demand for goods and material from overseas. That uses foreign exchange flows,
which usually causes a spike.
which causes a spike. There's another reason. When interest rates become low, you have the flip of a coin. In the past, local companies funded their debt in US dollars.
Yes,
Right?
heavily.
Right?
Yeah.
Because US interest rates were lower than Jamaican dollar interest rates. Now you get a flip. Jamaican dollar interest rates is lower or on par
With
to
US.
US. Now, what you want to do now is to refinance. You're bringing down your interest costs. So you are now borrowing in Jamaican dollar. You earn revenues in Jamaican, so you want to have your revenues and your financing in the same currency, so there is no currency exposure,
Correct.
right?
Because we've
So-
seen in the past
yes.
where companies have lost money in their
Yeah.
financials just because
Yes,
their loans were in US.
right. So now what you do is you borrow Jamaican, you use the Jamaican to buy US and use this US to pay out the US loans. So the fact that any country significantly lower interest rates, it must put pressure on the currency, especially if it's done over a short period of time.
Yes.
And you can look at the Dominican Republic, you can look at Trinidad, you can look at a number of countries and you will see it. Right? Now, if you think about it, if you have two countries, a strong, a weak, the weaker one, currency is expected to depreciate. You use interest rate to compensate for that.
Yes.
The weaker economy has higher interest
Interest
rates
rates.
than the stronger economy.
Correct.
Compensate. So you get back purchasing power parity. Right? In Jamaica, our interest rate is on par to that in the US.
For the first in forever.
Yeah. Guess what then? If you have the strong economy paying similar interest rates as the weak economy, then it says the weak economic currency must depreciate. Why? Because smart monies will say, why will I take a worse credit quality for a similar return? Shouldn't I move my money to
where
the
it's
stronger
safer.
credit quality and get the same return? So therefore, people will buy dollars and buy investments from overseas. Or the buyers of Jamaican dollar debt overseas, your global bonds, they don't care about what's happening locally. They want to know that if US is risk-free and I'm going to buy Jamaica, Jamaica must give me a premium.
Yes.
So therefore, Jamaica's global bonds, the yields on these have to be higher.
To make up for the poorer
Yes. And the risk
ranking
premium
of
is
our
right.
economy. Correct.
Right. So what happened is that you think about it now. Locally in Jamaica, the US dollar interest rate is lower than the interest rate on the Jamaica global bonds in US.
Okay, so there is
All
some,
right.
yeah.
So here comes an arbitrage opportunity.
Exactly.
For same credit, I might want to put my money in the global bonds. Right? So now what you find is that the dollar depreciated around 10% in about 6 months. Right? The prices of Jamaica global bond appreciated about 10%.
In the same amount
the
of
same
time.
period.
Yeah.
Buy it up.
Why? Because the bonds are attractive. So why not buy it up?
Yep.
Well, how do you buy it up? You take Jamaican dollar, buy US, and take the US buy up the bond.
Bonds. Yep.
For a Jamaican asset, technically.
Yeah.
It's
So
on the
what
same
you
day.
find is that, okay, I go after the global bonds to get better return. And guess what? The currency is depreciating and I'm benefiting. So I'm getting the currency depreciation and I'm getting the return on the bond. That's
Win-win.
what happens when a weak economy doesn't have high enough compensation in its interest rate as compared to a stronger economy. There's no two ways around it.
So you're warning us then? Or
That-
interest rate have to go up, that's what you're saying?
if the interest rate doesn't go up, you get one simple thing. The simple thing is the reserves.
Will have to get used. Yeah.
You have to use the reserves to support the currency.
Defend your peg.
Right? Now, this can be dangerous. It has led Barbados down the road of default and restructuring.
Because Black Monday, I think, in the UK.
Yes.
Yeah.
It is causing pressure in the Dominican Republic, where their currency rapidly moving, and they're trying to say, okay, we're not moving interest rates. Well, we're using reserve. So it bleed through some amount of reserve. The most evident one, Trinidad. Trinidad had a reserve of 12 billion US. It's now down to 8.
Wow.
Because why? You have a pegged currency.
Yeah.
And they're not
I'm
moving
trying to
interest
defend.
rates.
Oh, wow. That's really
understand?
dangerous. But well, they
Yeah,
have
so-
oil. Let's hope it lasts
Yeah.
for them. Yeah.
So what happens is that as long as the country doesn't increase its earning power to be bringing in significant more flows of US,
In order to keep that
In
defense of the
order-
peg up.
yeah.
Yeah.
this is going to be pressure on the currency and it will bleed through the NIR.
Wow. So how long you think we have?
What we try to do here, or what we're trying to do, is to say, okay, people, let's not cause any panic. Because if you think about it, your friend who you mentioned, it is only because she's not consulting with a financial advisor or have a proper treasurer why she would have been impacted. If the currency moves 10% in a period and it's impacting your ability to price your goods, did she also know that she could have gotten a loan at around 6% a year?
I think not. I'm going to link her to
And she could
to
have
you
borrowed
guys.
Jamaican dollar
Yeah.
and buy US when there was more than enough supply. Right?
You're going to say that I can't bigger up by
And-
name now. That you want to bigger up by
Yeah.
name, but I'm not going to do it now. But
so
yeah.
guess what? She could have borrowed 6% loans or 7% loans, right? Buy the US, invest the US from an early stage, and her cost then would have been down to maybe 3 or 4%.
True.
And that's easier to manage in the scheme of budgeting.
Yes.
If you're doing your projections,
You can put a
Yeah.
percentage in there. And I said the same thing to her.
right?
Yeah.
So you can deal with it that way. Or you didn't have to borrow, but you could have done a forward contract.
Which is what I want to know. Because here's the thing, right? So I
But-
get it,
but
then
here-
I get
here-
it, and
here
you
what
get
happened.
it. But
There's
she
a-
isn't. So I want to cut it there because she and a bunch of people I know listening in business and them lost and not going to get it. So the first question, which I think it kind of touches, you guys can bring a simplified product for them?
Yes.
Yes,
So
I
guess
like
what
that
happened?
first. Yes, you can continue.
There's also not only the person who is buying US suffers, What about the company who exports?
Yes, yeah.
And you bought goods at say when the dollar was 100 to 1. You pay $100, right? And you decide, say, okay, I can sell it for $1 US because the cost is $100. You get your $1 US, and when you come back, right? How much does it value now? Think
The
about
value
it.
has
now.
moved. Yeah, true.
Yeah? So you can get burned both ways, right? So the guy who is earning US also needs to know that they can lock in an agreement to sell US down the road. Not
I
just
get
the
you.
person
Who is
buying
burning?
US.
Spending. Let me not say burning. Spending in US. Correct.
Because the currency could have appreciated. And maybe when you get the $1 US and ready to sell it back, you only get $90. You think
Okay,
about
yeah.
it.
Yeah.
So you would have been
lose on
losing
that end.
$10. Yeah. So it requires participation from both sides of the market for it to work. Those who earn US have to be willing to sell US forward so that there is enough forward supply
In order to supply
in
a
order to
market
supply-
locally.
Yes.
So it requires a whole heap of organization.
Yes. So it requires you to say, okay, I am earning and I want to be able to price with a reasonable level of certainty down the road. So if you're earning and you will need US, you buy forward. If you're earning US and you will need Jamaican dollars, you sell forward. And that will get it balanced out. So we have that hurdle to overcome, to educate people so that they understand that it requires participation
Of two parties.
Yes. The only way it can work outside of that is if the central bank is going to agree to participate in
In that
market.
hedging. Which they can.
They
do
can,
they want
but
to?
at the same time, remember you also want a free float. So
So
you
you don't
want
want
as
intervention.
little intervention
Yeah.
As
from
possible.
the central bank as possible, because it costs for them to intervene. They use
Yeah, it
the
does.
NIR,
It does, yes.
and they have required benchmarks
Around
that
it.
they must meet, for your economic credit quality to change. So when you do a credit rating for a country, the reserve has to be at a certain level, the debt to GDP have to be at a certain level, and so forth. There are a number of indicators that you look at. And the better your credit rating, obviously, is the cheaper you can borrow money on the international market.
Yes.
Obviously, your companies that are doing business here can get better credit lines from their suppliers overseas and so forth. So it filters down in a number of areas.
Okay. And JMB's, I like pressing for the date. I know you're not going to give me idea. I'm going to ask anyway. When?
No, so we're working with the central bank
Yeah.
because you really need a medium through which to do this. And a forward market requires a number of things. Like one is an industry approved forward contract agreement.
That everybody, cool.
Yes.
Everybody has to be on the
Yes.
same page. If you have
This
it means
just
X.
like in the repo market where we borrow with clients and the reverse repo, you have a master repurchase agreement which the entire industry says
all the
yes,
music,
we agree to these terms.
Okay.
Because a forward contract is a legally binding contract.
Yes.
It's something that you can go to court for if you don't.
Yeah. Yeah. I tell people, say, as much as for the people who trade the contracts, even though you might never touch the money, if you truly hold it until its date, it becomes yours. And that's not just for money, that's anything, any commodity.
Right. So the reality is that you need one, that contract. Two, we're looking to have a platform through which we can do so. And three, we're looking for a common medium of pricing.
When you say come on me,
Yeah. So like when you buy a bond, you typically say we use what we call an industry yield curve. It's where the players in an industry typically indicate a price or a yield at which they are willing to buy an investment. So there is consensus. Right now, because we don't have all the participants at the table, you don't have that yet.
I get you. So a couple of people, whoever listening, you need to join them at the table.
So I'll give you an example.
Don't call a name.
In a month ago, I offered to sell a client a couple million US at 135. They refused it.
Too high. A month ago. No, a month ago that was about market. So they thought there was no deal there.
Refused it.
Okay. They're calling now.
That same client called me when it was at 141.
Well, that thing you called me about last month. It said that.
So you think about it now. That client from 135 to 145, which is $6, which is about 4%. You could have borrowed money for 1 year at 6.
Yep.
Which means the carrying cost of 1 month is about less than 0.5%. So you could have borne the cost of 0.5%, but no, you're down 4%.
Well, I mean, hopefully
That's what a
it's on the way
forward
back.
contract would have abated. Or if you understand treasury, because it's not just forwards, there are other things that companies do to raise money and to hedge FX risk. You have what we call factoring. So you know that you sold on credit and you have receivables. You're to get paid 60, 90 days down the road. You can say to us, if we look at these credit quality. If these companies that you are approved, and will you buy this debt from me at a price?
Yes.
Yeah, and give me the cash flow
Immediately.
Then, yes. You then now have the cash flow to buy currencies and do whatever you want to do and plan your affairs now.
And you do it on the flip side also.
Right. And there's also what we call reverse factoring, which is where I owe you
Yes.
I
your
can go to a
payables.
financial institution and say, I owe this guy some money. Would you pay this debt for me? And I pay back you at a certain time at a particular rate. Yeah. So you can do it both ways and people can save tremendously from
Yeah,
it.
I don't
But
know
that comes
why.
back to
It's about treasury
sophistication.
management. There's a number of tools that you can use. It's just that you need to reach out to get educated about them or get somebody who is educated about it to help you make the decision.
All right. Well, I'm going to beat Jamie a little bit and say you guys should push the market to it. But I know you are. I know you are.
We are at the table now. We are at the table with other players and with the central bank working through
Something quickly.
Yeah, the nitty-gritties.
So I am going to say this is nobody but me
like I
talking.
said,
Next year.
the market itself and the platform
In
itself
November, right?
doesn't solve the problem if the players are not educated.
True.
Like, you seriously need the participation.
Of people.
And I'll give you a reason why I tell you. So, many moons ago when I was working somewhere else, I was one of the first persons to do a forward contract, buying currencies from banks.
Wow.
Yeah. I wasn't in banking then.
Yeah, you have to explain to them what you're going to do.
So, when the currency was at 47,
Ooh.
I did forward contracts, buying the currency at like 53, 54, 55.
People thought that was crazy.
Michael Burr of Jamaica.
Yeah, Michael Ray. Crazy.
Guess what? The currency went up to the 70s.
80s, 90s, yeah.
And I was smiling all the way.
I am
After the bank.
surprised that you were allowed to do that.
As a treasurer, I was smiling.
Oh,
'Cause
wow.
I knew that based upon the level of commitments I have down the road, at 47, if I can factor in anywhere near 5, even 7%, because at that time the currency was depreciating at like 10, 12%. So if I can factor in anything reasonable so that my financial controller can project with a 5% accuracy or something,
Yeah.
that's
It's
good.
safety. You're giving them
That's
safety.
safety.
Yeah.
And that's insurance premium. I pay for it. That's fine.
Yep.
So I did. And it worked out that we saved hundreds of millions of dollars from it.
Yeah.
So, but it's not a lot of people since then were utilizing it for a lot of years. Then more recently, more people start to utilize it. The drawback is that I think for 2018, the market did I think it was 105 forward contracts, where I think it was 2 or 3 were on the sell side and the other 100 was like on the buy side. Meaning, people, 100 and odd people or businesses wanted to buy money in the future from banks. But only 2 or 3
Banks were willing
were
to
willing
sell.
to sell to the banks down the road. Then and there, you end up with a problem. Because under the current guidelines in the market, we have a guideline that we call the NOP. So the net open position. A bank can only take from its clients' funds to sell. And this is now balance sheet management, right? Because when you deposit money with a bank in the US, the bank can choose to convert it to Jamaican dollars, right? But only to the extent of 20% of capital or 8 billion, whichever is lower. 8 billion is roughly 65 million US.
Yes, not
So it is saying that I could take 65 million US of client funds and sell it to a company when there's a shortage of US. Or when there's excess US, I could buy 65 million and hold it on my book. But that's the maximum I can go to.
Yeah, that need to move.
No, before that guideline came into place, there were other guidelines, but those allowed much more larger holdings that helps to smooth the market. Because what a bank would do is, okay, there's excess supply, we'll buy it up, we'll invest it in instruments, we'll do whatever, we hold it. And then when there's a shortage, we may sell those instruments, get the US liquidity, and then we sell those to companies. So we helped to smooth the process from the banking sector. But with this guideline, it constrains us.
Constrain.
So the BOJ is aware, and they are looking at reviewing
What it is that they're doing.
yes, because I don't think initially the limitation was anticipated as much.
Yeah, I think they didn't expect as much local activity so quickly, I think.
Yeah, and I mean, in all fairness, I think it's kind of shocking the extent of refinancing that was done, as well as new capital market transactions that were done to raise financing to grow. Because once you put companies on a growth path, you need new money
Yep.
to finance those activities. And the old ones that were financed, now that you can get cheaper funding, you're going to refinance those.
Immediately, yeah, man.
Right. So you're refinancing and you're raising new finance for expansion. And that is in itself puts pressure on the currency.
Yeah. And so they have to smooth it out smoothly. Well,
So you have to look at the full picture to get an understanding. So you say, okay, we're importing more than we're exporting, and the gap is widening. That's one contributor to the currency. The refinancing activity wasn't anticipated as much. When we lowered interest rates, everybody think that, okay, lower interest rates, cheaper, less interest expense, so companies have money to deploy into productive capacity. But I don't think it was anticipated as much as to the impact it would have on the currency. So that's one. The stock of overseas investors and what the dividend payments and what the loan payments look like, I don't think that's been monitored as well. And that's a major area that needs monitoring. So we have nothing against capital market transactions because this is really putting companies in a position
to grow.
To hire more people, to pay better wages, to
grow the entire
increase
economy.
GDP, to benefit the economy, to pay higher taxes so that the government can afford more amenities for
everybody.
society, for everybody. You understand? But it's just that it has to be managed on a global scheme. Somebody have to see the big picture and manage that so that you don't get shocks. And the truth is, some aspects of it we may have to limit as well. Because where you have large investors coming to Jamaica to build businesses and they're raising monies here to buy the material from overseas to build here, that's increasing the demand for the US in a drastic scale.
Yeah,
so
that's true.
therefore, yes, we are happy to have investors coming in and build, but what's the implication
Of that building,
after, even in the initial stages?
Yeah. In
Because
the
we're
short
not
term,
saying it's
short
bad
and
enough.
medium. Correct.
We are
correct.
just saying it has to be managed.
I like that.
Yeah.
We don't have an inexhaustible amount of US.
That's true.
We
That's
have to
true.
manage within the context of what we have.
That's true. Things are better, but we are not
We're not
anywhere
there
near
yet.
there. That's
we're
true.
not, you know.
All right. So I've had you guys here talking for a while. I know. So I'm going to get to the two last things. So the Forex, because you mentioned Forex in a big way, the good way.
Yeah.
Talk about the Forex that people know now.
So, all right. So the margin trading is where you put up some funds on a platform and you get leverage.
Yes.
The average platform does like between 50 to 1 and 100 to 1 in terms of you may put up $1,000, they allow you to trade 100,000 positions or 50,000 positions or whatever. Right? No, you are not actually trading the currency. You're actually betting on the currency pair. So it's not the actual currency that you're trading.
It's the movement between the two.
in
Yeah.
the pair. Right. So, and you're compensated based upon what your factor was in terms of the 10 to 1, 100 to 1, whatever that leverage factor is, right? Now, the currency market is the most universal market. Everything that happens in this world impact the currency market. What it means is that you better be aware of everything that people do if you want to be successful like this, or at least the major movers and shakers of the currency market. There are speculations about the participants in this market from a speculative perspective because, let me tell you, less than 10% of currency activities are relating to currency trades.
Okay, everything else is just natural movement.
It is just business.
business movement. Yeah,
I sell to the UK, I get pounds, but I import my raw material from the US. So I need US dollars. So when I get my pounds, I sell it to get US dollars. A guy sell to the US, gets US, but he buy raw material in Jamaica. So you have to do the conversion to carry out your business. It is not from a speculative perspective.
It's just straight up business.
Yes.
Yeah.
So the bulk of the activities in the currency market is as a result of normal people going about their business, carrying out their affairs. You are now taking a bet
Against
that you can predict what normal people do in their day-to-day affairs
with a specific currency.
with a specific currency.
Yeah, and it touches multiple
Right.
industries. That's a lot to pay
Yes.
attention to. Wow.
So that is actually the bet you're taking when you say you're a margin currency trader.
So you don't believe that people can
The
build
average-
off of it?
So a few people are successful, but for people with proven track record, and I think it was, if it's Yahoo Finance or Investopedia, one of them did a recent publication where they did like a 3-year history on a number of traders, and it showed that over 90% of traders were either losing or just breaking even.
90%.
Imagine all that.
Losing or breaking.
In currency.
Ouch. That's in the currency trading.
Yes, in currency trading.
Wow. You can give me
Margin trading.
another number. What do you think is like the average return? Well, it would, not for a big person.
And for those who were, I think the same report said, for those who were successful, they were making an average return of less than 5%.
Wow.
Better buy a bond.
Wow. But you buy local stocks while they're hot.
So, I mean, a number of people have approached me over the years telling me of their success. I've never seen history. People say, but nobody has brought their accounts to say,
And sure.
here is my account with all my trades
From
over the
when?
last 2 years
There
or
we
3
go.
years.
Yeah.
But what I find is that they don't really track it. So they
No,
can't
but
play
the
their
platform has it. Every trade that you do is on the platform.
but-
So open your account up to me and,
And
show me your
some
trade
moves.
history.
Show me some moves. Yeah,
Yeah.
we had a guy that was
So there are-
pressing us about the same
no,
thing.
but
Yeah.
people-
trying to teach us
talking
and him
and talking.
and he couldn't get us he couldn't break down. I made X return in X amount of time.
Right.
And he
let me
had a
tell you.
method himself. He had an entire theory
I
and thing
went
him
to-
figure out.
I went to a course once. And unfortunately, I wasted Jimmy's money.
Oh, say it into the
yeah,
microphone
yeah.
so we show some.
Unfortunately, I wasted
Mr. Duncan
the company.
can hear.
Because having gone in there, my first question for the tutor was, have you ever traded? No.
Wow.
You can't teach me to trade.
Wow.
You've never traded? You can't teach me to trade.
Facts.
You don't know about the emotions of trading.
Facts.
You have no clue.
Facts. And the different emotions
There's-
at the different levels.
Yes. And the different emotions that come with it. You've never done it, you can't teach me to do it. Like, this is not a theoretical thing here. Right? Emotions are
I've been saying
way
it.
deep.
I've been saying,
Very
yeah, man.
different.
Shout
And-
out to
and let me tell you
Ryan
something.
Strawn, Five Soleil, skin in the
You-
game.
Decide that you're going to do some what we call dummy trades. Track it. This is where I would enter. This is where I would exit. And you will log them. And you will track the performance. And then, after you do that for, say, 3 months, put some real money on an account. And do the same thing for 3 months.
yeah, man. The dummy always different.
If you get anywhere near that dummy account, I'll give you a
Never
job.
happens. It
You
never
come.
happens.
It's different. Because when it's not money, there's no
Nice,
emotion.
man. Yeah, man. It nice.
When it is money,
Yep.
that's emotion.
Yep.
It's totally,
Skin in the
totally
game. It make a
Skin in
world
the
of
game.
difference. Yeah.
So there are a number of people. The other question I ask him, if you can make so much money, why are you wasting time teaching me right here? I can't pay you enough as you would make.
Rich.
But you find
Why
that
aren't you out here
the
trading?
man in the class, that's why
Kwame just locked down the
The
course.
class, the class is where they make the money, you know.
Yeah, like, you're
exactly.
making your money from the classroom.
Yeah, man.
Because if you're this good at this thing, you should be locked before a computer trading and making money.
You have time
all
for
the
this.
time.
Yeah, you have
all
time
the
for
time.
this.
I
Dog
say
is
it
cheap.
all the
Because
time.
everybody wants to allocate their labor and their resource where it makes the best return. Why are you here? Am I paying you more than you can trade and make?
There
No.
we go. There we
Then You're
go.
in the wrong place. So I decided, hey, that's my first day of the course. Like, and that's my last day.
How
That's
expensive
it.
was
Like,
that course?
I can't remember how much it was.
No, them expensive, man. I see one already for 14,000.
No, not it was years ago.
That was
so-
back then.
Oh,
yeah, but no, but I'm sure it was expensive then too.
Yeah. So,
Yeah.
so I just said, you know what? Nah. And I've had people come to me and tell me, listen, you guys want somebody to trade. I say, okay. Listen, you're not going to trade 1 or 2 months and come to me and tell me that you're a trader. You understand? You need history here.
That's across the
You
board.
need
too.
history
That's
here.
across the
You
board.
show me some sustained performance, and then I will
man.
say, okay, here is something that you can manage.
Come,
That's
he'll tell
across
you,
the
say,
board.
show you the
So,
gray hairs.
Yeah, you don't know. Like
Yeah.
I've been through 4 or 5 crises.
Yeah.
I'm coming from Russian crisis.
Ah,
As a matter of fact, come from Finsac, come into the Russian crisis, come into the Argentina, you come into the meltdown of the world, you come into the Eurozone, the pigs and all, through all the crises. Listen, the emotions that come with trading, the stress that comes with trading, it's ain't a boy game.
serious thing.
It's
And you
no-
cannot learn it in the books.
There's no book.
There's no book.
There really is no book. Yeah.
There's no nothing. I'll tell you. I'll give you my personal bloodbath to trading. Right? Yeah. My bloodbath is that I was in a trade once. And I can't forget, I was making it was like about 60 or 70,000 US on the trade. And I was closing the trade, but I needed my supervisor to sign. Yeah.
Keep going.
And I went downstairs.
To go find the supervisor.
Yeah. And by the time I went downstairs and come back up, I was losing 20,000 US.
Yeah. Shout out to my brethren. Not calling his name, but know himself. He got bathroom
And
one time.
Then and there,
No
you
stop loss.
realize how fast.
That market moves, yes. Yeah. Because that same brethren I'm mentioning, he's the first person I've seen watch the president speak with him computer open at the same time.
Yeah.
And Yellen is, no, not the president, the chairman of the Fed.
Yeah.
And as the chairman of the Fed talk, him trade immediately. And him say, I mean, at the time I didn't understand what he was doing. Him waiting for the right word. And it's something simple sometimes. I say like, softening our Chinese exposure. Immediately moving. Yeah, so it's not a joke market. I know it's not. And I tell people, if you know nothing at all about finance, financial literacy, anything like that, right? If your financial literacy is low, you don't want to start with Forex. Yeah, that's not the place to start.
Okay. So here's the article. It says new studies shows just how unprofitable day trading is.
Oh Lord, you know what? Send me that. It will be in the show notes, guys. Check the show notes. You will see the link.
WhatsApp it to me.
I have some of the stats. I want to quote you.
Yeah, man. Say yeah, man. We're not rush. We can do it and then we can give you the fun part, the hard part, and then we wrap.
Let me see if I can pick it up for you. Because it was telling you some of the stuff.
It says the realities of day trading.
Yeah. It says of the long-term day traders, only 1% made more than, and this is for Brazil. This is our country one. Only 1% made more than the Brazilian minimum wage
Wow.
of $16.
Wow.
Less than half of the group of people made more than $54 per day. The salary of an average Brazilian bank clerk.
Wow. People
Yeah.
check the show notes right now. It's going to be in there.
So I'll show you, but trust me, I sent this to a friend of mine who he was so excited he's learning to trade and he's making money. And I said to him, bring up your account. And when I checked his account, he was down like 8,000 US. I was like, you really going to throw some more money right there?
Boy.
Yeah, like really over a couple months to just throw 8,000 US. You know how much beers that come by.
Yeah.
Really, yeah, but seriously, I mean, the average person, all your friends won't tell you they are day trading. If they are making money on a sustained basis, I have a job for them.
Yeah. Well, the one guy I know who makes money from it doesn't do anything else, and he lives in front of his screens all the time.
Yes,
Lives
man.
in front
and
of
how
them.
much
Yeah.
money is he making?
Well, he takes care of his family, but he's not one of the people who
so
tell
the
he's one of the
question
people who tell me those classes are rubbish. That's what I'm telling.
Ah.
Yeah, he's one of the people who say those classes are rubbish.
And
And he said the same thing. He said if them could do the class, they
Yes.
were if they could make money here, they would be doing the class because you don't have no time.
And the question is he making more than he could have made using his resource to do other stuff?
I
Is
don't
he
know.
even maximizing?
I tease him all the time because I tell him I make more money in the stock market than he does. Yeah. And him start paying attention to stocks now too.
Yeah, so the question is, what's his opportunity cost?
Yes.
Yeah.
Major thing. I like that. I like that you bring some reality to it. And you bring a whole heap of knowledge. And
Yeah, man.
and you
Yes.
brought Kerry.
I'm the bodyguard. I just make
So-
sure I reach
So you,
safe.
you look, this says, the academics looked at just under 20,000 new traders and found that over time, they lost more and more money. Of those that traded for a single day, roughly 30% turned a profit. Hear that? A single
Wow.
day.
3 out of 10.
Conversely, only 3% of the people that traded for over 300 days made any money.
So the one day.
Say that
and
part
it's-
again.
Oh, of those that traded for a day, about 30% of them made money. But for those that traded consistently over a 300-day period, only 3% of them made any money.
Wow.
Wow.
3 out of every 100 trader. And the beauty of it is that that's a global market.
Yes.
So that sample can be representative of everybody in the world. Now, of course, I'm not going to say that. I know the statisticians just go, no. So it's not quite how it works. However, that actually sounds pretty good to me. Yeah.
It's not easy.
Yeah, it isn't. If it was easy, everybody would be doing it.
Yep.
It's
Yeah.
not what people make it to be. And you can't do something for 2, 3, 4 months and say you're good at it.
Say that again.
You can't do something.
Say that again. Say that
Yeah,
again.
you can't. You like, seriously, put it in the context. Would you go to a doctor who has gone to med school for 3 months and say he's a professional?
Nope. Ask your doctor when have they done this
Yeah.
before and when last time sleep. That's
Yeah.
a major question.
You know, so you want people who have demonstrated a track record over time before you say they are good at it. You know?
And even then,
So
it has changed how even I speak. Because people ask me now, so which stock you can jump in and get 50%? And I go, all right, 2 things. 1, what's your goal? 2, there's stocks you can jump in and get 50%. But if you are asking me that question, you don't have the level of knowledge for me to actually answer you.
and
Because it's dangerous. And I won't remember to tell you when to sell either.
I would almost bet you that everybody who teaches FX course makes more money.
Teaching.
the course.
Oh, 100%. 100%. Yeah, if they were making it from trading, no. I do 1 stocks course a month, and every month I ask myself, why am I doing this? Because the money don't come from that. The money come from trading. And it takes away from my time in the market, which bothers me. So I don't have to trade every day. Imagine if you have to be in front of that computer. Oh, because them don't have
Every
the
second,
market
yeah,
don't
go
lock.
downstairs to your
The
boss.
market don't really lock. The market might lock in America. It's open somewhere else. Yeah, that's
The
market
it.
don't
never
sleep.
stops.
Yeah.
There's time zones. Time never stops.
So, I thank you guys properly for coming, but I'm going to ask a hard question now.
Yeah.
Kerry, you want me to ask you or you want to ask him first?
You can ask me first and then he can back me up.
Give him some time. All right. Well, the first rule of this, I'll give the rule and then I can ask the question. The rule is simple. You can't say JMB. And these days you can't say Sagicor
that's the
Financial.
question.
Yeah.
I thought it was the $200 million question.
Oh, you know, I wasn't even going to touch that. You can
Okay.
if you want to, but I wasn't going to touch that in this one. It's fine.
No, I just raised it because Kwame earlier was talking about, capital market transactions and so on and how those transactions impact the FX market and ultimately the exchange rate. And what we've been actively trying to do is to clarify, I call it, a rumor, quite honestly. A few weeks ago, there was an article in The Gleaner that spoke to, everybody was concerned about where the dollar was. It had just hit 140 at the time. Everybody was panicking. And there was an article with an interview apparently done with a senior representative of the Bank of Jamaica, BOJ. And the BOJ would have alluded to certain events that are driving the dollar, as it were. And the Bank of Jamaica representative, of course, did not state or comment on any particular event and said so. But unfortunately, the writer of the article chose to use whatever they thought was happening to say, oh, a known event.
Or noise that you hear.
Noise that you hear, yes.
I must-
Known event is the pending conclusion of the JMB transaction acquiring a percentage of Sagicor Financial Corp, just over 200 million. And unfortunately, a lot of people took that, oh, well, JMB coming to find 200 million US figure finish this transaction.
I was guilty of that too.
And,
I've
and
contributed
it's all good.
to that.
I mean, and a lot of people
I was
felt that
very
way.
guilty.
Yeah.
And well, the good thing is that the Bank of Jamaica ultimately, through an excellent Twitter thread
Yes,
on what was
explained
happening
it.
in the FX market,
Correct.
not only explained what was happening, but also clarified that that's not the case.
True.
And the reality is, we've publicly disclosed, well, of course, this transaction was announced months ago. It's yet to be concluded, of course. But, of course, at the time, we would have had to demonstrate that we were able to be good on that. So it's not like November, now we are rushing to find US.
Exactly.
Right? So
Correct.
that's one.
Correct.
So that's obvious evidence that it's a rumor. And the other thing is we also had disclosed at the time that we are financing the transaction through a mixture of debt and equity. That's it. So it's not us. It's not a capital markets transaction. We're coming in to look for US dollar and thing. And unfortunately, that rumor drove a lot of speculation as well, which ended up doing exactly what we did, what people would want it to
exactly what Kwame pointed out earlier.
Exactly.
Yeah.
So you have to look at speculation, perception.
In every market,
If
in every
you
trading market.
hear that something big is coming, your first instinct is that, let me see how I can benefit from this.
Correct.
So even if the transaction itself was not going to impact the market, the fact that you start to speculate on it, you have withhold your supply and therefore create a shortage in itself. So the fact that you have created a shortage, you have contributed.
You have created the situation.
You have created the
yeah. What they call that? What kind of
Self-fulfilling
prophecy?
prophecy.
Self-fulfilling prophecy. There we go.
And that's
Yeah.
how it goes. So now the central bank came in for a couple of days while you start to see people come in and start to sell. Because what? BOJ is gonna
It's gonna hit that market hard. Yeah. You
So
can't. You have more
therefore,
money than everybody else.
You start and you say, well, everybody run in and sell. But the key for me, is that the market has to be educated.
Yes.
And if
Financial
people were
literacy.
educated on how things work, they wouldn't make some of those bad decisions.
Agreed.
And that's the end of it. Like, I've spoken to the central bank and they have been on the trust. That's why if you follow their Twitter handle and
Yeah, man, they're doing a good job.
Yeah,
Big
man,
up the
they're doing a
BOJ.
good
job.
getting out
Definitely.
there saying, hey, public, let us educate you, let us work with you, let us make you understand how things work so that you don't have to assume or you don't have to look at this guy over here who you think is a Mr. Know It, but doesn't really know it.
There we go.
Because we have some so-called experts.
Hit them. Including me. That's true. It's true.
Yeah,
It's
you
true.
have some so-called experts who just
Talk
go
very
out there and
strongly.
profess and talk and like I have a thing where in Jamaica, everybody's an economist.
Yup.
I've never seen a country with so many economists. If you're a doctor, you're an economist.
Yeah.
If no matter your career, you're an
Yep.
economist.
Yep. And
And
it's
all
so
of a
funny.
sudden, everybody's speaking authoritatively.
Yeah, I'm glad I am not an
So-
economist.
So right away,
it
if-
is something
if
that
people
people
are more
say.
educated, then you get rid of the market
Yeah.
nice
Yeah,
and
yeah.
so forth.
And I'm not going.
Let
Let me try play a nicer role since you've been bad guy. Usually I'm the bad guy on the podcast, but I mean I do know some people are pushing for education. That's part of what I do too, because the financial literacy make a world of
Yes.
difference. A lot of people just don't know. So I know people out there trying to raise the literacy, and I love that. But you're right. People need to something I say all the time. Check the experts. I speak, and people think of me as an expert, and I say I'm not an expert. But if you think I'm an expert, question everything I say. Test everything I say. And no expert should have a problem with you questioning them. Yeah. Experts love being questioned.
Indeed.
Yeah. Because it shows that one, I know what I'm talking about. Two, you have also learned. And sometimes three, your question forced me to almost revise my thoughts and we end up learning more.
Yeah,
Yeah.
and
Yes.
sometimes people speak, I say, well, show me where you have expressed an opinion before and assess the aftermath against your opinion to say, how
Did I
Did
do
I perform?
exactly?
Yes.
Every expert is supposed to measure
Yes.
what they're saying and then measure after
Yes.
the fact. And an expert shouldn't be afraid of
Being
making a guess. You shouldn't be afraid of being wrong. You should be able to say if it's that FX, the Jamaican dollar is going to be, if you say it's going to be $150 February, February come back and say, I was right or I was wrong. Shouldn't be afraid of that.
Yes.
Yeah.
And it's across board. So I like that. Which is what we're going to give you a chance to be right or wrong.
Yeah.
So thank you for that. So the hard question we always ask everybody is, what stocks do you like? So you can't say JMB.
You
Right,
can't
this is
say
not-
Sagicor either.
Yeah, you can't say Sagicor either. Thank you.
The thing is, when it comes to stocks, like I tell you that I don't just like stock for like stock. I have my investment or my mentality that I use, my philosophy that I use to invest. And for me, I look at first the economy. What is the likely direction of the economy in the next couple of years?
I like that. So you look on, let's say you're looking on a 2-year time scale. I've asked people 2 years before. Let's go 3.
So if you're looking at 2 years,
Well, 2, 3. Yeah.
what you see happening in the economy over the next 2 years?
For me, no, I don't want
You
to talk
see the
yet.
economy building on certain capacities,
Uh-huh.
right? You see we're marketing certain aspect of the economy. Then who are the key players in those areas?
There we go.
So I start with the big picture.
And work your way down.
First, what's happening in the world? How is the world influencing my country?
Yep.
What's happening in my country? What industries are benefiting and what industries will grow? Who are the key players in
In
these
those
industries?
There we go.
And therefore, I now look and say, these key players, how does one industry rank to another industry? How should I weight my portfolio? Which industry is stronger? So therefore, I should have greater allocations to those industries and so forth. And come right down. If there are several players in an industry, I look for the key player and I will pick maybe 2 of the players and I work with them downwards. So if I look at it in Jamaica, the financial sector has been one of the stronger ones. Who are your key players in the financial sector?
I wouldn't know the top 5. No, man, you can't. That's not how we do this thing, Kwame. You can't tear out the thing.
They want some name. Call some
Pick
name.
2 stocks that you, Kwame. Let me be careful, all right? Because you are an analyst and this was a
So
JMB
you said
episode.
that I can't say JMMB.
No, you cannot, sir. You cannot say
Sagicor.
Sagicor,
I
sir.
can't say
And this is
Sagicor.
just Kwame.
Right.
And this is just Kwame, not Kwame
Not
from
Kwame,
JMB.
aka
Right.
Just Kwame's personal things that he likes.
So I still like NCB stock.
All right.
They are an industry leader. They are the regional, probably the biggest financial institution,
Yep.
regional,
Yep.
So they still have been diversifying their product offering and so forth. And they have a strong trust in IT
They do.
and becoming a fintech type business.
Yep.
So that I like about them. Right. So the stock itself, I like it for its market diversification, where they're in Jamaica, Trinidad, Cayman, and so forth. Barbados, right? So they're under trust to look at how do I
Regional
benefit
plays.
from the region,
Correct.
how do I benefit from different areas. You would have seen where they bought into Guardian, and so therefore they are looking to diversify the product offering as well as the regional diversification. You'd have seen where they bought a bank, was it in
Bermuda.
Bermuda.
Yeah.
Clarion.
Right. So you see where they're on that path. Their numbers, their revenues have been on a
Heavy
strong
tier.
trajectory.
Yeah.
Their profitability has maintained. They have strong management.
Not even just maintain. If you look at it deeper,
Right.
Q4 numbers, them Q4 profit. Anyway,
I mean,
I'm not going to interrupt you. I'm sorry. Go.
I said
Yeah.
the numbers are a little different from you.
Yeah.
But overall, the numbers are strong numbers and the company
Very strong.
itself, decent. So I like that as a stable company in your portfolio. Okay, people always eat.
All right.
So food and beverage, it's always there. There are certain stocks like the Grace,
Wisynco.
which are mature companies, the Wisynco. So I like Wisynco for diversification, right? It's a very diversified company. They're very innovative. So when you look at the plastic ban, and then when you look and see how they would have had plans in place to
handle the
diversify,
plastic,
yes.
I remember that like a
And-
2%
yeah.
conversation. I was so impressed.
Right.
Yeah.
And if you look at him taking a trust into dairies and agriculture and other stuff, linkage
man.
industries to support the business. If you look at strength of cash in the business as well. So one, they're in industries which are scalable. Two, they have cash to grab opportunities. 3, they have a fairly decent management team and business continuity. Business continuity. So you have second tier management plan in progress, right? And their trust on the international scene as well. They are looking for new markets,
There we go.
exploring new markets to export to. So they are not just narrowing their activities to the Jamaican economy and the Caribbean. They're
Exactly.
actually launching wide into the wider universe
As
to
far as
ensure
they can.
diversification of your revenue streams. So I like that about them for that sector,
The long term.
long-term sector. I still like logistics.
Okay.
Jamaica's position as a country, we can be a hub for a lot of other areas. So I
This
still
side, the
like,
Western Hemisphere.
we are just actually starting to tap into the whole logistics thing.
True logistics. That's
This,
correct.
yes.
Yeah.
We can do packaging for a lot of big companies in the US, the rest of the Caribbean, and so forth. And this just be a big hub where your Walmart brands, we could be getting the bulk here and packaging into different store brands and
sending it to
sending
South
it out.
America. Yeah,
If you
all
look
sorts
at
of
Marcus
places,
Garvey Drive, you see where those lot of cars are. Cars from there goes to Cayman and other Caribbean islands. So that's like just a hub. So the whole logistic business is very big. If you look at Amazon, what is Amazon? It's a logistics business.
Yep.
It's a business that says preference has changed and people want to buy things from their living room rather than go in a store. How do I facilitate this? That's all they
Exactly
do.
so.
Yep.
So its logistics is still one of the newest and strongest areas of growth globally. In China, 92% of all transactions are done via the mobile phone. In the US, is around 65 thereabout percent.
WeChat runs
Right.
China. Yeah.
Yes.
Yeah.
So when you look at it, it is still saying that generationally, people want to stay away from brick and mortar. I want the convenience of doing what I want to do on my phone or my iPad.
You go
And
brand.
it reaches
just
house.
and
Yeah.
reach
There
my
we go.
house.
Yep.
So in that area, I still like Kingston Wharfs for that because of how they're
positioning themselves.
Yeah.
Yes,
Okay.
Yeah.
I still like them there.
Okay. Okay. That's one way to
Yes.
attack. I like how you attack it. Yeah.
Right.
Okay.
So in Jamaica, construction is still strong. So you have to look at who can benefit from constructions. So you still have the hardware and lumber. You still have
Lumber Depot. Well,
Lumber
this,
Depot.
yeah. Well,
Lumber
people hearing this now as a
Depot.
listed company because this will definitely come out after the IPO.
You have cement company where they have been retooling and partnering with PMEX and other companies in their field. So they have been improving. They have been doing very
All
well.
right. Well,
So
you
if you're
keep-
looking over the long term, those are some of the companies.
That you
As
can
I say,
base
I
on.
could go sector by sector.
I don't want you to do that.
Yeah.
into
It's usually two or
what-
three. It's usually two or
what
three
I would,
picks. I don't want you to go the whole of
look
your
at.
picks. It's all right.
Cygnus is a nice new startup. They are looking to do business
2-3 years.
differently. So it has been working for them. And I think they still have a lot of
To grow.
ability
Yeah,
to
man.
grow. There are a lot of other companies that I could get into. But like I said, balance your portfolio with growth companies, mature companies. For the safety net, you try to keep those in the mature companies. You'll get a smaller return,
But you'll be safer.
but you'll be safer.
And then as you grow, you
yeah.
increase.
And then for your riskier money now, you look to take on some growth companies for your bigger return. Still bigger risk, bigger return, and so forth.
I like that.
So-
Let him know him thing, you know.
And yeah. So that's how I'd go about it.
I like that. I
From a
like
stock
that.
perspective. But
Thank
the key to remember, is portfolio. Don't forget, allocate. You need some real estate in the portfolio.
Okay.
You need some interest-bearing instruments. You
Okay.
need some stocks. You need alternative investments. Some people take into private equity. So a guy have a business, him need some funding. You go in as a partner. You might be a silent partner where you just help to fund it, or you might go in where you take active role in helping management to turn around a business, and you can eventually list and make
There's
good
a lot of
returns.
options out
So there are other options out there, that you can explore. So the key is to set your objective and set the path and stick to it.
Yes. Yes. Remember why you
Is
started.
your biggest danger. Remember, your emotions is your biggest danger.
I like that. That's a
The
great
best
thing.
friend but it's the worst end.
That is true. It's like fire.
Yeah.
Kerry, you have to come very comprehensive now, right?
Lord have mercy, no. Well, because the thing is, I would have shared mine the last time, but I guess with Kwame's new knowledge, my basic thing is I'm more of a strategic investor trader, investor than tactical when it comes to stocks. And so for me, it's just about NCB again as a big one for me. I mean, these stocks that I know have that potential to be bigger and better over time, even more so than they are now. And also dividend stocks are also something that I love. Love my Carreras. It's still controversial, I know, but loving my Carreras as a dividend
I worked for them for too many
saying.
years to not pick them up. Yeah.
So just those are a couple for me, are the ones that I typically say to people, are good ones.
I like that.
Depending on your objective.
Well, I press Dana every week and it's I only. This week I'll just do one because people always press me for one. My nicest pick this week is, I don't want to say it because I don't put all the money I want to put in there yet, but I'll say it. Jamaica producers. I like Jamaica producers over the next 2 years, year and two. Yeah, they're doing a lot of things.
So the advantage of a Jamaica producers is they're diversified
In multiple countries and multiple industries.
So, like I said to you, logistics is a big area. So you may not want to go fully in an area, but you can get exposure through a company that has it in their portfolio. Jamaica producers own 45% off. Right.
I know, you see what I'm doing.
So
Yeah.
you could get exposure to logistics
Through them.
Yeah.
Correct.
So it's just like how I'd say to you, okay, you said, don't recommend JMB or Sagicor. I said, buy proven.
Yeah. That's what you said. That's smart.
Proven
It's gonna
owns
benefit.
the exposure.
Yes,
right.
yes.
Therefore, because so you look at it, how do I take an exposure? I take an exposure in many different ways. I take direct or indirect. I can buy into a company that owns companies in those industries, or I can buy directly into the company.
Yep. And some might say that proven at its size might get a bigger impact from the exposure that its associate company, which you guys know about, is about to get hit with. So yeah, I like that kind of tip. And that's how I think too. Yeah.
Yeah, you look at the exposure. How do you take the exposure?
So for me, it's Jamaica producers, and I'll try and make it a little more comprehensive. I know they have one of the largest juice brands in, I won't say all of Europe, but it's in like a bunch of companies in countries in Europe. And last year or the year before, they made steps to enter about 4 more new markets in Europe with it. It's Hugastan, I can't pronounce it, Hugas something. But the point is they have that there. And I didn't buy it back when they were doing the retooling, but I paid close attention. And I know now that they're about to reap the rewards of being there, and they're started to reap the rewards of being there. Outside of that, in Jamaica, they do own, like we say, a heavy part of Kingston Wharves. And they also own St. Mary's banana chips. I'm not going to start the Chippies versus St. Mary's war, but, I own the company that is in St. Mary. And they are growing, and I believe in them personally.
Right.
For the rest of this year, 2019, 2020, I can't see them doing wrong. So that's my personal pick. I won't pressure that night this week.
You say you won't pressure that night because he pressures me.
Every week I pressure that night and I don't say nothing. But JP's my friend. Yeah, come that night. Let us do the one.
I think KW is better priced in exposure you get to KW from JP is better from a buying JP perspective than buying
definitely.
KW perspective.
Right.
Buying KW.
Definitely.
Good point.
So, but there's one company that I always like, and we never really mention much about it, but I'm always
you can rap with it. Jamaica Broilers.
We talk about
we hit this one on the podcast too many times. Yeah, man. Broilers of the entire Jamaica Broilers in America
I'm
now.
a Broilers guy.
Yeah.
They're very innovative. The management principle is
strong.
up.
Yeah.
The staff morale up. And that's a key thing for growth. Like when you have management and staff that is of high morale,
then you know it's good.
Innovative, it's good.
I would say they're like JMB in terms of the family structure they have with the company.
They strongly believe in
Culture.
In
the
culture.
staff rarely leave.
That is true. That is
So-
true. Yeah.
And as you can see, it's brave when you go to the US and they know
and they're strong there.
strong there.
Strong.
Strong.
Strong
So
footprint.
I like them for the diversification of markets and
Haiti.
showing innovative. They're strong in Haiti as well.
And we spoke about FDI in terms of
Yes.
companies from America reaching out into Jamaica.
Into Jamaica.
For
We are
them,
reaching
they're reaching
into
into
their
America.
market.
Yeah. Big up every company doing that, including years.
Oh yes, I was to mention that you guys are pushing.
Yeah, we're huge fans of that, and I'm a huge fan of my company doing that. My company, that's why I'm thankful for that. Don't know if you want to put anything, but thank you, Kwame, thank you, Kerry, for being here. I know I'm happy that you're reaching out like this to people. I'm happy that you can come and give people heavy knowledge because that's what I wanted to hear.
Very digestible way. I like the way you broke it down. You gave investment jargon, but you still spoke in a way people can understand. So I really rate that.
Yeah, you never lost nobody. I like
nobody
that.
lost.
Yeah. So when I get some money, I might try and hire him away from you guys.
But
thank you very much. So I will wrap it here, guys. Thank you very much again. This has been earnings season. I'm at RT Row, Randy Row.
And I'm Danai at H Danai.
And this has been earnings season. Thank you very much, guys. If you guys want to give you, let me not end it just here. If you want people to bother you, feel free to give me your social media handles right now.
I do so.
You don't want that. Oh, that's so smart.
JMB group. That's it.
That's it. There we go. Big up JMB for this. Thank you, guys.
Reach out to JMB.
I know we spoke forever.